public hearing is to hear testimony on resolutions number 160957 and 161118. I'm recognizing a quorum in the configuration of Councilman Dom, Councilman Green, myself, Councilman Johnson, and President Clark, who is always our pitch hitter. So with that, can you please read the title of the resolution, Ms.
Resolution number 160957, a resolution authorizing the Committee on Commerce and Economic Development to hold hearings regarding the Philadelphia Capital Consortium, and 161118, a resolution authorizing the Committee on Commerce and Economic Development to hold hearings regarding the JumpStart initiatives throughout the City of Philadelphia.
I would like to recognize Councilman Green, who is the author of these resolutions, for comment.
Thank you, Mr. Chair. I'm delighted to be here this Monday morning to talk about these two initiatives. I'll reserve my remarks regarding the JumpStart until we hear that resolution. But in regarding the Capital Consortium, this is an issue and initiative that's very dear to my heart. One of the first initiatives I did when I came into council was to work with the Commerce Department, Principally Harold Epps and also Jonathan Snyder, regarding this Capital Consortium initiative. And it takes me back to my experiences as a small business lender with Meridian Bank at Broad and Glenwood. And during that time period, when we did loans, we often had lending authority up to a certain level, but when we did larger loans, we had to work through loan committee. And so through loan committees, you often got a chance to learn about different types of credits, and you had a chance to see how people analyzed credits and got information. And so for me, an opportunity to try to recreate that same sense of working in collaboration was a great opportunity, and I think the Capital Consortium provides that, where it brings together CDFIs, credit unions, lenders together to talk about the things they're working together. In addition, the Capital Consortium has created a lending tree type initiative for small businesses, going through our Commerce Department, an opportunity for individual business owners who are interested in getting credit to apply through the Capital Consortium, and that information is sent to various lenders who are part of the consortium, and then those lenders respond back to the Commerce Department, and the Commerce Department then connects with that applicant, letting them know the various lenders who are interested in providing them with financing. To me, the biggest issue in our city is poverty. The best way to address that is by growing jobs in our city, and the best creator of jobs is entrepreneurship. So I think the Capital Consortium is providing a great opportunity to address this issue, and one of the major issues for small businesses is access to credit. So I'm glad we had the opportunity to have this hearing. In fact, the Capital Consortium just had their quarterly meeting this morning in the caucus room on the other side of this hallway. So I think it was great collaboration between both the legislative and executive branch to really promote small business development, access to credit, and to address the issue of poverty in our city.
Councilman Green, I want to thank you for bringing forth these two resolutions. From a prior life of mine, I was an underwriter and president and CEO of the Philadelphia Commercial Development Corporation, which established a lot of small businesses. Many of them are still around, which we're good, and paid back the money. In light of the prospect of us going after Amazon, in light of us dealing with Rebuild, which is a $500 million to $400 million, depending on how you count it, opportunity for small business, redoing our libraries and rec centers. In light of the fact that all of these programs together, if you include the school district and their capital program, Councilman, more than equal the stimulus package we got from Washington. So we should take advantage of this, and the way that we do that is through access to capital for small businesses. And what I'm glad about is this is not a Democratic thing, it's not a Republican thing, it is the right thing to do for the city, and I thank you for putting that forward. I want to also recognize Councilman Tollenberger, who is here. Are there any other comments from members of the panel? Seeing none, Ms. Williams, would you please give the first panel that is testifying?
Jonathan Snyder, Lynn Ozer, Michael Ellis, and Sophie DePinto.
Welcome and thank you for your patience. Please come up to the table, have a seat. Pull the mic close to you. State your name because we are recording this both electronically and by the stenographer there. And welcome.
Thank you for having me. Good morning, Chairman Jones, Councilman Derek Green, and members of the Committee on Commerce and Economic Development. My name is Jonathan Snyder, and I serve as the Director of Business Financial Resources within the Office of Neighborhood Economic Development of the Philadelphia Commerce Department. And I direct the Capital Consortium. It is my honor to be here today to discuss resolution number 160957 on the consortium. The Capital Consortium is a simple way for businesses to access capital. A business owner completes a simple 2-page application that asks basic information about the business, then it sends it off to a network of more than 30 lenders. If a lender is interested in working with a business owner, they contact them directly within 10 business days. If an owner is not contacted by a lender, they are directed towards our business technical assistance resources. The consortium is designed to save business owners the time and expense of searching for loans in a sea of lenders. The consortium began as an idea discussed by several of our community partners who were engaged in work in the Promise Zone in 2015. These meetings included partners like PIDC, LISC, the Enterprise Center, Women's Opportunities Resource Center, Finanta, Entrepreneur Works, West Philadelphia Financial Services Institution, the Merchants Fund, the Small Business Administration, and the Office of Community and Economic Opportunity, Community Empowerment and Opportunity. All of the community partners commented that the small businesses they worked with were overwhelmed by the number of applications they had to put together in pursuit of a loan. The issue transcended the Promise Zone. There were applications for banks, for credit unions, for community development financial institutions, and for other nonprofit lenders. This was further complicated because banks were closing many bank branches. Even if a small business owner wanted to talk to their local branch, they may not have had the opportunity. We all wanted a simplified way for businesses to obtain the funding they needed for their business to grow. The Commerce Department, in conjunction with the Enterprise Center, PIDC, and other CDFI partners, began the work of bringing lenders together to discuss the best way to simplify the loan process. We met quarterly to discuss how to best achieve this goal. Initial thoughts were to create a common application, but this proved to be impractical. Every lender has their own underwriting process and required slightly different information. Having borrowers put together a loan application, including attachments to share with a network, would not have been a seamless process. Instead, we created a process of making a warm, virtual handshake introduction using a simple form that asked information which is required of all lenders: name, business type, years of operation, annual revenue, how much is being requested, how the money is to be used, and are there any credit issues that we should know about in advance? This document has been submitted to you for your review. Once we receive an application, it is shared with a network of lenders. If a lender wishes to work with the business owner, they contact them directly and notify us at Commerce. If a lender and borrower complete a loan, they also notify us here at Commerce. The Capital Consortium members have grown to over 30 lenders, and I've provided the names of the organizations as an additional document. Since the Capital Consortium launched in July 2016, Commerce has forwarded 74 applications through October 11th of this year. 64 have been contacted. These are updates from what you'd received in the written testimony. 64 have been contacted by at least 2 lenders, and 41 have been contacted by 3 or more lenders. 10 loans have been made, not the 9 that are listed. And at least 1 is in process towards settlement. The 10 applicants who were contacted by only 1 lender were connected with business technical assistance providers to help develop their businesses and help them be ready to access capital in the future. We have worked to publicize the consortium through Commerce's network of neighborhood organizations. We have had articles featured on Philly.com, in the Philly Tribune, Generosity.org, NextCity.org, CityPalooza.com, and the consortium has also been featured in web videos on Opportunity Finance Network's site, Venturize.org. More recently, Commerce has partnered with Rebuild on their outreach to local contractors to let them know about the forthcoming opportunities to bid on rebuild projects. We have completed 5 of the 10 scheduled outreach meetings for vendors, and we anticipate that many small contractors may benefit from the Capital Consortium when they need to obtain working capital for projects. We have also been grateful to the support of Councilman Green, who has attended the quarterly meetings and provided resources to help grow the initiative. One of the improvements, again, this is not on the written testimony, but one of the improvements we've recently made is we've switched to an online form that automatically sends applicants off to the network of lenders. This has reduced staff time at Commerce and has sped up the process.
Good stuff.
Commerce is committed to helping small businesses open, grow, and thrive in Philadelphia. Access to capital is critical for their success, and the Capital Consortium is a part of this puzzle to help eliminate barriers for small businesses to grow. Thank you for your time and consideration. I'd be happy to answer questions, any questions you may have at this time.
If it's okay with the panel, the committee, I'll allow all of them to testify, and then we'll ask questions directly. But I want to recognize the presence of Councilman Heenan, who has joined us.
Mr. Chairman, that's fine. I'm in agreement.
Okay, thank you. Please state your name for the record. Don't be shy.
Good morning.
All right, good morning.
My name is Lynn Ozer, and I am the president of Fulton Bank Small Lending SBA Administration Lending Division. Along with our affiliates, we are a $19 billion bank covering Pennsylvania, New Jersey, Delaware, Virginia, and Washington, D.C. We extend government-guaranteed loans to customers who do not meet the regular commercial lending criteria of Fulton Bank. One of our primary missions is to serve businesses in low, moderate income areas, as well as majority-minority populations. Fulton Bank has recently opened a loan production office at 1601 Market Street, as well as a home mortgage operation on North Broad Street in Philadelphia. As I am responsible for commercial loans only, I will not be addressing our efforts in the low-income housing mortgage programs. I was fortunate enough to hear about the Capital Consortium from Jonathan Snyder, who I met at SBA's Meet the Lender program in October of 2016. As Fulton Bank was making its existence known in the city, the timing of this meeting was fortuitous. The lending programs offered by the Small Business Administration are well suited for the exact target audience of the consortium. We agreed that Fulton Bank should join, and I attended the first meeting in January of this year. The biggest challenge to lending in LMIMM populations is finding qualified small businesses to lend to. The Capital Consortium identifies prospects, which is one of the most costly aspects of small business lending. Since joining, I have had the opportunity to review 47 applications, which are sent to me electronically. Each consortium member has the opportunity to reach out to potential clients to potentially offer financing based on the organization's appetite for the specific client profile. I have successfully closed 2 loans to 2 different businesses and have a third one in the works. The prospects' applications indicate how long they've been in business, which is very important when screening prospects. It gives us information on collateral available and total debt of the business, in addition to the dollar request and the use of funds. The process allows interested lenders to speak directly to the prospective borrower and puts everyone on a level playing field, allowing the prospect to choose their own potential lending partner. Fulton Bank considers this an extremely valuable prospecting vehicle to reach the exact target audience we would otherwise have difficulty identifying. The Capital Consortium has also had various speakers at our meetings regarding new programs in the economic development world that are extremely informative and potentially very useful. Thank you.
Thank you for your testimony. I want to also recognize the presence of Councilwoman Parker and Councilman O, who are members of this committee. Please pass the mic to the next person to testify. Pull it closer and state your name and begin your testimony.
Good morning. My name is Michael Allis. I'm the Vice President of Lending at Finanta. On behalf of Finanta's clients, Board of Directors, Advisory Committee, and staff, thank you for the opportunity to discuss the Commerce Department's Capital Consortium initiative. Finanta is a nonprofit lending institution facilitating access to capital and consultation services to entrepreneurs, first-time homebuyers, and consumers in the Philadelphia region since 1996. We promote the growth and economic expansion of diverse communities and commercial corridors through the infusion of capital and the provision of business, consumer, and homebuyer consultation services and technical assistance in a manner that is uniquely conscious of the cultural, social, and language barriers that growing immigrant and minority populations face. We've been involved in the Capital Consortium since the planning stages and have contributed feedback throughout the creation process. As a nonprofit lender, the Capital Consortium Common Application has been helpful to us as it has provided an additional inflow of referrals. It has also become a referral source from us for those businesses whose projects do not fit within our financing guidelines. Often, small business owners come to Finanta as first-time borrowers. We have found this to be the case with Capital Consortium applicants as well. Through the Capital Consortium, the city is providing a curated list of vetted lenders, collectively able to service a wide array of project sizes and loan requests. This is a necessary service for those business owners who require technical assistance in order to access capital. We would like to see the Capital Consortium to continue being highlighted by the city as a unique tool for small businesses to access capital. We encourage the city to continue allocating resources for this program and that more initiatives are brought to the program to increase the volume of new applicants. Thank you.
Thank you for testifying. We have one more.
Yes, thank you.
Welcome.
Thank you. My name is Sophie DePinto. I'm the co-owner of DePinto Guitars at 407 East Sherrard Avenue in Philadelphia. Thank you for having me here this morning. Hi, Derek. DePinto Guitars is a small family-owned company. We have been operating out of Philadelphia since 1995. We run a full-service guitar shop. We buy, sell, trade, repair, give lessons. But we also have our own brand of guitars that are designed by my husband, Chris DePinto. The guitars are sold out of our shop in Fishtown, but they're also wholesaled to other stores nationwide. Since the 1990s, we had all our DePinto brand guitars made overseas in South Korea. However, a major shift in manufacturing trends caused our factory to close in 2015. Instead of switching production to China or Indonesia, we decided to bring our manufacturing back home. And we found a production facility in Lower Bucks County that we could work with. Between this facility and our shop, all our DePinto brand guitars are now 100% made in the United States. At this transition is where the loan comes in. Initially, when our factory in Korea closed, it came out of the blue, and we had a year with no production at all. There are other reasons we needed funding. The cost of American-made instruments is significantly higher. Also, there are the costs of marketing and rebranding. While my husband and I both have excellent credit and have a successful business, we are still a very small company. We only have 4 employees, sometimes 5. At the size we are, it's hard to get a commercial loan, and I was dreading the application process. I heard about the consortium from NKCDC, which is the New Kensington Community Development Corporation. And since I was in the process of looking for funding anyway, I had all the information handy for the application. And I filled it out and submitted it. I wasn't sure what to expect, but we got, I want to say, at least a half a dozen offers back. I'm not sure of that number. The nice thing about the consortium was that I was able to compare the products that different lending institutions would offer without having to go through the separate applications for each lender. Although I knew exactly what I was looking for, before the consortium, I'd have to go through the whole loan application for a certain lender before they would get an offer from them, and often it was something I wasn't looking for, like a line of credit or a 3-year loan or something like that. And then I'd have to start again with a different lender, and it was a very time-consuming process. So after reviewing the offers I received from the consortium, I followed up with 3 or 4 lenders and eventually settled on working with the PIDC. They offered me the funding and the terms that I was looking for, and And I would like to thank Derek Green and Jonathan Snyder and the Commerce Committee for their interest in this project and making it work.
Thank you for choosing Philadelphia. You could have took that business anywhere. but you chose Philadelphia to stay, and it speaks to our vibrancy. It's one thing to have bread, butter, necessity businesses, but when you have guitars, that is not a purchase that people have to make, and so therefore it speaks well of the neighborhood and the local economy. I have just a history point. The Philadelphia plan was done, and none of you are old enough to know about it, but historically, the Philadelphia plan was designed, and I think PSFS helped sponsor it. And it was to look at the lending practices, mostly for housing, in Philadelphia by zip code. And you always speak, Councilwoman, it's tattooed on my brain about middle neighborhoods. And where the dollars were going. And that was a companion of CRA, Community Reinvestment Act, to make sure that deposits received were investments made by lending institutions, which is a precursor to my old organization, PCDC, Philadelphia Commercial Development Corporation, which was now absorbed into PIDC, Philadelphia Industrial. So I want to thank Commerce, and I want to thank PIDC for this concept and keeping access to capital as a priority. But the question I would have for Commerce, are we keeping track of how much dollars for small businesses? And the federal definition of small business is what, 2 million, 2.5 million. I think my definition of small business must be micro and much smaller. And so are we keeping track of those kinds of capital investments, loans, venture capital that are going into particular jurisdictions, neighborhoods, and zip codes?
Through the Capital Consortium, we are tracking how many loans have been made, where the business is located. All of the businesses that have come through, off the top of my head, save one, fit that small business definition that you mentioned from the federal government. We are also on an annual basis, in preparation for council hearings, reaching out to the CDF, Community Development Financial Institution community, to find out how many loans they've made, the amount of the loans, and where they're going, if they're comfortable providing that information, at least by zip code. And that's how we are tracking those types of investments.
See, for big picture people, like at large council people, the entire city is their district. For us lowly district council people, our district is the United States, everywhere else is France.
Right.
And so we care about the particulars of where. And we want everybody to do well, but we particularly want our districts to do well. So that kind of information and codification of that data would be helpful.
Absolutely, and we will continue tracking it. We can add that to, or at least the council district, to the information that we're tracking.
I think it'll help us all. Councilman Green?
Thank you, Mr. Chair, or should I say President of the 4th District.
Yeah.
Thank you all for testifying this morning. It's a pleasure to be here, and Mr. Pinto, thank you for being here. I know as a business owner it's very challenging to take time out of your day to actually come and testify. I had a great opportunity to visit your location on East Girard, and the fact you came from Old City to East Girard and staying within the city of Philadelphia is great. One of the questions I have, and it kind of touches on some of the testimony from both you, Mr. Pinto, Ms. Ozer, and Mr. Ailes, is that you talked about the time-consuming process of applying for loans and not being able to get loans that fit what you're trying to do. I think one of the benefits of the Capital Consortium is the fact that it is providing kind of like a lending tree type of initiative. So can you describe that process? And then Ms. Ozer, you talked about the challenges, and I think Mr. Ailes as well, the challenges trying to find prospective applicants and the cost of money that you spend in trying to identify. So I guess from both perspectives, Mr. Pinto and Ms. Ozer and Mr. Ailes talk about the challenge in trying to identify loans versus the challenge of trying to source prospective businesses.
Thank you for the question. So when we've all applied for loans, and they always ask the same information, but every bank has their own form it's got to be filled out just so. So this is just kind of like a unified form. You just fill out one form and it goes off, and then the offers come back, rather than, here's one for, Third Federal, and here's one for PNC, and here's one. It's all the same information. You have it there, but, this goes in this column and that goes, and you want it to look right because you want to get the loan, So it's a very time-consuming process.
As far as sourcing small business loans, generally speaking, in my world, we do the loans that the other people can't do, because I do government guaranteed loans, SBA loans. The first thing you do is the credit elsewhere test, and if a borrower is able to get lending conventionally, they're not even eligible for SBA lending. But in the targeted markets that we are looking to do business in the city of Philadelphia, Jonathan's applications all come from the zip codes that we're looking to do business in. So it's provided us with numerous leads at no cost at all for us to review and contact the borrowers directly, and that has saved us a good deal of money. And as a bank that's coming into the city, we don't have bricks and mortar here, so it's very difficult. People aren't coming to us, and Fulton Bank's name isn't that well known in the city of Philadelphia at all. So we're trying to make our mark and trying to get into these businesses, and the Capital Consortium has been a perfect marriage for us to identify prospects and talk to people that we are interested in lending to. And specifically, if you blanket the world with advertising and so forth that you do small business lending, you're going to get a whole variety. You're going to get all sorts of startup businesses, which are wonderful. I have no problem with startup businesses, but if that's not what you're looking for, you can quickly tell from these applications if it's somebody that you want to contact. Just like Stacy was saying, there's Sophie, was saying that there's, a bunch of different banks out there. Well, there's plenty of lenders, borrowers, so we don't always want to talk to all of them, so this is great.
Yeah. And I would be remiss if I didn't point out that Fulton is a new bank to the city, but not quite that new. I had some experience with Fulton when I was on the board of a certain charter school in the 9th County District when they were expanding, and when we were trying to expand the Westwood Lane Charter School, we looked at a lot of different financing options, and Fulton was very creative in helping the Westwood Lane Charter School to expand. And then there was another religious institution in the 8th County District. I won't say the name of that institution, but they had been a part of had a long-term banking relationship with a certain institution, and they had never been late in any payments and always had strong payment history. And when they were trying to refi a loan, that institution was not helpful. We were able to reach out to Fulton, and Fulton was able to make that work. So I just wanted to say that on the record. But one of the things I've been noticing is that more and more banks are coming into the city of Philadelphia. I guess because as a former banker, I'm always looking for branches and different things. And I know it's expensive to have a branch, bricks and mortar branch, but I've noticed a lot of newer banks that are not traditionally been in the Philadelphia market, been coming into the Philadelphia market. So you say Fulton Bank, M&T, BB&T. I remember even seeing an ad in the Philadelphia Business Journal for East Stroudsburg Savings Association, which is in the Poconos region. So clearly people are looking at the greater Philadelphia region as a way of coming into Philadelphia, and I think it's great that a lot of these institutions are joining the Capital Consortium. But one of the questions I have for you, Jonathan, is how do we grow and get the word out regarding the Capital Consortium, especially to commercial corridors all throughout the city, regardless if you're in the 4th District or the 6th District or the 9th District? How do we get information out more right to those small business owners on commercial corridors?
That's a great question. Thank you for the opportunity to discuss that. We at Commerce work with a number of partners throughout the city. So we are focused on our commercial corridors. We are focused on working with community development corporations, CDCs, who are out there working directly with the businesses. So we are targeting our outreach in terms of talking to them about the consortium, going out and meeting with the businesses who comprise their areas. We talk directly to businesses. We go to any meeting that is possible, which is one of the reasons why we're thrilled to go to all of the rebuild meetings, because it helps get the word out. We are trying to improve the online experience for borrowers and to create a forum that is both easy to use and easy to direct people to, in order to make that another way. So you can tell them, hey, go to the business.phila.gov website, check out all of the different resources, and the Capital Consortium is located here. We are working to see if what types of targeted outreach to those communities might look like and how expensive it might be to advertise in local papers. We have not done that traditionally. We've worked with our partners who have established trust relationships with the businesses in order to spread the word, spread by word of mouth and have it happen organically. But we're continuing to look at other ways of outreach as well.
Okay, and that's a good segue when you talked about resources, because the Capital Consortium is somewhat a new initiative here for the city. I know the last two budget cycles, we're focused on providing those resources. I want to thank my colleagues.
And we very much appreciate that.
Yes.
Thank you.
And I want to thank my colleagues for supporting the Capital Consortium in the previous budget cycles. I'm looking for their support in the upcoming budget cycles as we go forward. Thank you.
Thank you.
No such thing as a free lunch, right? I want to recognize Councilman Don Tollenberger and then Heenan.
Thank you, Mr. Chairman. Thank you. And thank you, Councilman Green, for bringing this resolution to our attention today. And thank you for your testimonies today. I had some questions on the data. I guess it's for Jonathan Snyder first. I just want to make sure I understand the information, I guess, on the second page, middle of your testimony. It says Commerce has forwarded 71 applications through October 11th. 63 were contacted by 2 lenders, 41 contacted by 3 or more. Then it says 9 loans have been made. Were those closed?
Yes.
Okay. And then, so there's a total of 10 when the one in process goes to closing.
Actually, one already closed. It just happened very recently, so we're up to 10, and then we have at least one that is processing towards settlement but has not closed.
So out of the 74 applications, 10 or 11 will close.
That is correct.
And the ones that didn't close, are there any specific reasons why? Was it ability to pay, willingness to pay? What were the issues?
We're actually also formulating a follow-up survey to find out what various issues. The goal of the Capital Consortium is to help people have access, but I think that some of the businesses reached out to some of the lenders, and maybe they can answer this question better, and realized that, maybe the interest rate's too high, maybe I didn't think this through and I need to come back. So even though a loan didn't close, that might still be a successful resolution because they had access to the information they needed in order to make a rational decision. But we will have more information from that after we do our follow-up surveys to all of the people who have gone through the Capital Consortium.
What's the average interest rate on the 10 loans that closed?
That I cannot answer.
Okay.
We have, in trying to work with the banks and the CDFIs, we actually just wanted to know the amount and if they have settled a loan.
And then I have a question for Ms. Ozer. On your testimony, 47 applications came in, and it says 2 loans were closed out of 47? So what happened to the other 45? What was their issues?
Okay, first of all, the ones that were pure startups, I didn't reach out to. That's just our appetite for not doing them. So that was, I'm sorry that I don't have the exact amount, but I'll be honest with you that I only reached out to 2. We ended up doing them. So the reason that we were interested in them is they met the criteria of the Small Business Administration. They were already in business for at least a year. So I had 1 year of tax returns to look at. And they had experience. I talked to them. One of them was one of the best that I've seen. It was a graduate of Goldman Sachs, 10,000 small businesses. And in my history of doing small loans, every one that I've made to one of those graduates has been successful. So I was like right there, ready to do that one. The other one was an existing child care facility where they were moving 2 doors down because they needed more space, and they needed money for leasehold improvements. So again, with SBA lending, we're not as concerned with the collateral. We want to make sure that they have the management capability. And that's what we did.
You bring up a good point, because I come out of a small business background, and I never really wanted to borrow money from a bank. That was the last resort. Seriously, you don't want to borrow money from a bank. You want to try to figure out how to do it on your own versus you go to a bank. And so my question is, the 10,000, the Goldman Sachs program, which is a great program through PIDC. I'm not sure it's continuing, but it's a great program. Is it? Okay. Is there a way that of the 45 applications that you didn't consider, that we notify them to maybe consider going through that program? Because many of this isn't just borrowing money, it's understanding when they should borrow money and for what rate and term, and is there another way to do this where they don't have to borrow the money? Because debt will kill a business.
I couldn't agree with you more, but I think that, from my perspective, the small borrowers, they probably don't necessarily even know about GS's program,
right.
But GS comes to banks and asks us to help identify future prospects. And one of the things that they ask for is they have to have been in business for, it's either 1 or 2 years. You can't be a startup to be in that business.
But can't the consortium work with this Goldman Sachs program and suggest to those people who aren't getting loans or not getting approved that they consider going through that program, or even make it a requirement, because at least you're training somebody to be successful as an entrepreneur?
Absolutely. We would be able to, we already connect them with a number of technical assistance resources to help get them loan ready, so they can take a look at their financials or help create financials if they have never done that before. But we can also look at forwarding them directly to the Goldman Sachs program, especially as it is continuing.
Okay. Thank you very much. Thank you.
Thank you, Councilman. Councilman Tollenberger.
Thank you, Mr. Chairman, and thank you, Councilman Green, for bringing this to our attention. I think it's very important. I think a lot of people know, but some of you may not know, that Philadelphia is the largest, poorest city in America. And if we in this council don't do something about that, shame on us, because we need to. And that has motivated me from the very moment I took the oath of office to be here. And so I thank you all for participating and for hearing. Ms. Oetzer, for those people that didn't get any kind of, well, that you didn't, I guess, interview or bring forward, did they get any kind of a notification from Fulton Bank or from any bank? Nothing.
Well, that's one of the beauties of being in the Capital Consortium. And it sort of works like, I don't know, somebody suggested before, like LenderTree. That there's a group of us, and Jonathan can probably talk about this better than I can, all the members get to look at the application, and if you are interested in reaching out, you do that on your own.
Gotcha.
And if you don't reach out to them, they don't know that you did or you didn't, so.
Well, okay, I can understand that. On the other hand, somebody ought to reach out somewhere and just say, there are some vehicles that can help you, that can make you a better business, and knowing when to borrow money. I couldn't agree more with my colleague, Councilman Dom, on this subject.
I agree with you, and that is what we do to people who have not been reached out to by to multiple lenders. We send off an email to them, to the same email address that they provided to us, which is how they contacted us, listing all of the technical assistance resources that the city funds, but also some of the ones that we don't fund, like the small business development centers at Temple and at Wharton. We can also direct them to the free library with their business resource and innovation centers, or so-called BRIC. We try and connect them to whatever resources they may need or want to grow. And I think after we send off that survey to those businesses, we'll have an even better idea what types of assistance they're looking for and can need in order to help get them ready.
Is it possible that you could send us one of those rejection emails? I mean, make pretend that I'm applying for a loan and no one has talked to me about it.
Certainly.
Just so I have a sense, because I think the more educated our businesses are, our startups, and if they have the opportunity to get into 10,000 businesses, I think that's what we need to do. We have to get people employed, and through that is starting up small businesses. That's actually the major employer of the whole United States, and has also been something that has always done Philadelphia well. The fact of the matter that we start businesses here, the diversity of the thought. And some of them turned into giants. A lot of people don't have any idea that Hershey chocolate started in the city of Philadelphia. He started here, and he had to grow his business. He needed to be in closer contact with cows, with dairy, so he moved out to where he is. But the fact of the matter is, it started in Philadelphia, and I believe it was on Spring Garden Street. So there's a lot of people that want to start businesses here. The more educated we can make them, the better off, and retaining them in the city of Philadelphia, I think, is very important, that we want to do as a council.
You're absolutely correct. And one of the things that we do is when we send off our initial email, it tells them, it tries to educate them about the borrowing experience. So it links them to both places on our website, but also to Opportunity Finance Network's Venturize.org, which further helps to educate people about what it is to get a loan, what they're going to need to provide. And I'd be happy to share with you
Yeah, if you
one
could
of
share
the
that
rejection
with the
emails.
chairman, so we can distribute that, that would be very good.
Absolutely. I'll be happy to forward that.
Mr. Pinto, I have a really quick question for you, because you're here. One, I want to thank you for opening your business or keeping your business in Philadelphia. But when you brought your manufacturing, well, approximately, how many guitars do you sell a year that you manufacture? Approximately.
Well, probably our biggest year, we did like 500 guitars a year. It's not a huge, it's a boutique brand.
But still,
Yeah.
Stradivarius was a boutique operation.
The American production is significantly slower, but, if we can get it right, we can expand it, and be at the same numbers that we were at before.
We want to help you get it right. I do want to know how many jobs are in Bucks County through.
Yeah, it's
manufacturing.
kind of a spread out process, because, we have our jobs at our facility. There's a manufacturing plant that does fabrication. They do all sorts of things, and they have a foreman there who worked at a guitar
They
factory.
don't work exclusively for you, though.
No, not at all. So, but they're working for a bunch of there are a lot of guitar companies in the region.
So they make guitars for a lot of people.
Yeah, they're starting it. They're starting to do it because it's harder to get manufacturing done in South Korea now. So there's a bigger demand in the region.
Well, I think some things are coming back our way. Did anyone from the state of Pennsylvania or the federal government actually, were they any assistance to bringing these jobs back to the United States?
Well, I haven't really. I have somebody from the Small Business Administration who I have been in contact with, and I didn't reach out to him. But we found this plant, and between their guitar division is probably like 8-10 people, and then we have a guy in Delaware who does the finishing, the painting. So it's lots. It goes all over the place, and it's lots of.
When you brought this manufacturing back to the United States, and it's in Bucks County, but I'd love to get them closer to Philly. I like to get them in Philly.
Well, we would love to have them in Philly.
And it's in Pennsylvania too. But the fact is, I'm very interested in what's in our borders. How many jobs do you think that you may have created for that Bucks County company, if any at all?
Well, I think if you pool all the companies together, all the different guitar brands that are putting orders into this factory, there's like a dozen people that work in their guitar division.
Okay.
So.
Well, it's something. It's somebody. And like I said earlier, a guy by the name of Stradivarius was a boutique operation, and today his products are worth millions of dollars. I thank you for your time here. I also, at some point, would like to come visit you in your shop if I could.
Oh, sure. Yeah, we'd love to have you.
Thank you very much. Mr. Chairman, thank you.
That's our historian on council. Chair recognizes Councilman Heenan.
Thank you, Mr. Chair. And if anybody's ever watched the Shark Tank, you notice that when some people start out, they start out in their garage, and they don't have the capital, and they don't have the resources or the knowledge or the, in addition to the lending sources, you have Power Up and you have the Goldman Sachs. I mean, they don't have access to any of that. And we're hoping that, maybe this concept here grows, right? So where people, start off with two, because we are a specialty manufacturing city, right? We usually don't do anything in bulk, which I hope we do when we attract Amazon here to Philadelphia and or the region. That we had specialties, Stetson hat, and I have a manufacturing. It's on the corner. There's they specialize in very finite and special orders for hardware, and there's 38 people. And 38 people is more than 12, all right, but 12 probably started with 2, and we're hoping that this concept here grows, which leads me to my first question. The group, the consortium, how much has it grown, in numbers?
In terms of the number of lenders who are participating, it started off with maybe 15 to 20, and it's up to 30. That 15 to 20 number is from my memory, so it might be off, but it's grown. We've added to it. People have reached out to us to be members of the consortium, like Fulton Bank. And I also have to take one opportunity to say not all of the businesses who are listed or not all of the lenders are banks. We also work with a number of different other types because community development financial institutions help to fill a gap of businesses that banks can't lend to. I just wanted to take a moment to say that.
And typically, from my understanding, the micro lending and guaranteed lending usually has a over 90% success rate, right? So there's a very little or small default or bankruptcy, is that correct?
I believe that for
For the borrowers?
That's information that I would have to get for you.
All right, if you
from
could
the
just
SBA.
go through a history of
Yeah, I
your
can-
15 to 30,
Excuse me.
because I think the concept of having it government guaranteed or bank on a micro level backed is more successful.
So Finanta is a micro lender. Our micro lending portfolio has a loss rate of 1.2%, which is pretty small.
Can you repeat that?
Yeah, so the microloan portion of our portfolio at Finanta, under $50,000 is how we define a microloan, is 1.2%, which is very, that's low.
It is small, okay. All right, out of the 74 initials, 63, 41, and 11, is there, have you been able to identify in which type of businesses have applied so we know where the need is?
The number
And the amounts.
Certainly. The businesses who applied have ranged from small retail operations all the way up to at least one major manufacturer. It really has run the gamut. It just depends on how you come to the program, how you find out about it. A lot of the local people are, a lot of the retail on commercial corridors find out about it and have applied, but there hasn't been one consistent type of business that has been taking advantage.
So it's not industry specific, it's a broad net.
That is correct. A lot of the larger businesses and a lot of the ones who are, have been very established have already established banking relationships, and this is a referral service really for the businesses that don't know where to go, but at least the one manufacturer who came through who did obtain a loan did so coming through the consortium as opposed to going directly to their the bank that they have an established relationship with.
Okay, so I got two questions and I'll yield my time for the next round here. All right, have you coordinated with Department of Commerce with some of its other loans, like our storefront improvement loans and our SafeCam and any other kind of small business programs that they have?
Absolutely. We work with the people who manage those programs directly. We work with the corridor managers who are responsible for getting businesses to apply to those programs. So we've been working very closely. We actually haven't had one that's come through the consortium yet that has taken advantage of some of those other resources. But we fully anticipate that that will be happening in the future.
You think it will happen because maybe you're going to have a little more engagement with the commercial corridors and offer some sort of seminars, you know, as we reach out to our 13 commercial corridors, or how many commercial corridors we have, or 13 bids and or other business corridors that we have offering and putting together seminars, because I'd be interested in my district, you know, working with the Department of Commerce and PIDC and yourself in offering these kinds of opportunities for people to either bridge the gap or maybe, you know, determine whether they want to move forward with some sort of expansion or purchasing equipment and kind of packaging their needs to what is offered.
Absolutely. You set the date, we'll be there.
Okay, well, that's a deal. Thank you.
You can't get better than that. You said the date, it'll be there. I think it's, and I'm going to yield to my colleague, but I think what you're hearing is that you've been discovered. It's a great idea. It's a great concept. How do we get more? And there are, you know, there's a need, and people are, as the young people say, thirsty for this type of access to capital. You have people in basements that have been operating online for a long time and are ready to make that next step, but don't know you exist. Peanut butter doesn't know jelly exists to make some bread. And so you got to, oh yeah. The other piece is we want to know how you coordinate this with existing programs. PIDC is the flagship of lending for Philadelphia, working with the private sector. How does that piggyback one to the other? And with that, you don't have to answer that now. You've been discovered, but by budget time, we're going to take a deeper dive into how we can experience that in every zip code. Okay? Councilwoman Parker.
Thank you, Mr. Chairman, and let me say good morning to each of you. I too want to start by just saying thank you to Councilman Green for his leadership on this issue. My comment and question, and this is when council is like really at its best. So it is a follow-up on Councilman Dom Taubenberger's, Chairman Jones, along with Councilman Heenan's comments relative to you can't have, in essence, one without the other. While folks have screamed, we need access to capital, and we know it's necessary, as Councilman Dom and Taubenberger alluded to, the training, the institutional knowledge, which is why the next panel coming up when we hear about JumpStart Germantown is going to be so important, because you have to marry the two. And so with that being said, Jonathan, I think Commerce has done an excellent job. When I look at the hodgepodge, the organizations that are participating, you just got started, on this. And I'm sure as the program grows and more institutions become aware of it, we will find a way to try to encourage more institutions to participate. But now here's the teacher in me. And Councilman Heenan, I'm not sure if this is part of where you were going, and Councilman Jones acknowledged it when you talked about the sort of localness of marketing and advertising. If there were sort of a one-stop shop something, I'm always like for a one-stop shop. if it was 10,000 small businesses, if it was Power Up, if it was the Capital Consortium, if it was JumpStart Germantown, of course the work that we always partner with PIDC, is there a place somewhere sort of electronically, via, a website that, we can literally go and promote? Because for me, I can see it now, it's 9th District, it's for all of our small businesses. We've gotten to our business association presidents, my office, and we're canvassing on our commercial corridors, making sure that businesses have access to this document. Does something like that exist? And if it doesn't, because I know printing is extremely expensive, even if we can have it electronically, there is something, now I'm a dinosaur, while I don't want the phone book anymore, there is something about the power of having a book in your hand that you can literally look at. I'm still reading hardback books. I'm not, what is it, the Kindle now? I'm not reading electronically, right? I'm still reading books. Can we do that, or is it already in existence?
We have tried to do that with the business portal, the business.phila.gov website, which has a tremendous amount of information, and we're always trying to find ways to better organize it, to make it as simple as possible for all businesses to use. It currently lists all of the technical assistance resources that are out there, all the people that we partner with, some of the organizations that we fund directly, some ones that, again, like the small business development centers that just exist. We are constantly trying to make that better, and we're continuing to make that improvement. So hopefully we'll have even a better and more robust website for you to direct people towards in the future. Coupled with that, I like you. I like to have a sheet of paper, or at least have something that you can share with people. And we don't have one for the Capital Consortium yet. We have a hard application. This is how you fill it out. And it's the consortium itself is designed to be simple. I mean, one-page piece of paper is all you need. But I think that more of a comprehensive guide to all of the different programs that are available, something that you can download easily, is something that I'm looking into, and I'm sure that many of my colleagues are looking into as well.
Well, just a note, as we get through the budget process, when I think of you, that is something that I will be advocating for. In addition to that, I would hope, and maybe we can see if our chambers of commerces, if that is something that they would be willing to support us in financing all of our chambers, because as you noted, when we talked about the diversity of the applicants, they're from the neighborhood base, small retailers to, the DePintos of the world that are looking to grow and to expand. So I definitely want to work with you and commend each of you for your work. To Fulton, I know you. I went to Lincoln University, right? And so in Chester County and out in the county, everything is Fulton. So we're happy to have you doing work in the city of Philadelphia. Thank you.
I do also want to say a special thank you to Councilman Green, who has been instrumental in finding the resources that we do have for the program to work as it has. So finding that online application process and helping to make it accessible. We're still working on doing better ways to reach out, especially to our immigrant community that may not have as much of an online knowledge or presence. So that's why the paper copies always come in handy too. Thank you.
Councilwoman Parker, it's okay to use hardback paper books. It's all right, it's okay.
I was told that books aren't cool.
It's okay. Chair recognizes Councilman O.
Thank you very much, Chairman.
Come that way, yes.
Particularly for Jonathan, I do have some questions. Just I'm not really familiar with how this actually works. So if you could just fill me in. So there is a consortium of about 30 lenders of various types. There is a single kind of introductory application form online. It's distributed to those 30 or so members, and then they will evaluate whether or not they want to make a loan based on collateral, history, whatever it is that they decide to make a loan that they believe they're going to get paid back on. Things like venture capital, angel funding, all that is not really the realm of this to my knowledge. It could be, but this is more like a small business that has a history, that has real estate, for example, things that would say we're gonna pay this loan back. Is that about right?
That is correct. It is designed for businesses that have cash flow that can be measured, and so it's not for an aspirational startup business that hasn't been able to demonstrate it. Some of our lenders do loans to startups, but they're going to be very small loans that they know will be repaid. It hasn't been designed for venture capital or angel funders.
Okay. So this comes under Office of Neighborhood Economic Development of Commerce Department. Is the focus of this primarily neighborhood businesses?
Yes, in terms of our outreach especially. Any business in the city of Philadelphia or any business looking to come into the city of Philadelphia is eligible to apply to this program. But where we're focusing my attention is on our neighborhoods. So those are the people that we partner with when we, the bids in the neighborhoods or the different CDCs that exist. We're talking with them to make sure that the businesses who that traditionally haven't had as much access get that access.
So you're relying on the neighborhood environment, for example, the CDC, civic organization, existing businesses, to in addition provide you a profile or some understanding of the risk versus kind of return, or no?
No, we're just relying upon them for outreach.
Okay.
So they talk to businesses, say, hey, we have this great program, you need a little bit of capital, this is the where to go. So you don't have to run around to 10 different banks, hear no 10 different times in order to find the one that's going to say yes. So it's a way of saving the business owner time, as Sophie discussed earlier, of not having to submit 30 different applications.
Okay.
And the banks make a decision, or excuse me, the lenders make a decision on who they're going to reach out to. You still might have to go through their underwriting. You will still have to go through their underwriting process, provide the additional financial forms and tax returns that any business has to provide when obtaining a loan. This just saves you the time of having to go to so many different places.
I understand that DePinto Guitars did get a loan kind of connected to PIDC, and so when the banks do their review and make a decision, they will contact the SBA or any type of loan guarantee. Is that correct or no?
It depends on the bank and whether it's part of an SBA program or not. So some of the micro lenders aren't using an SBA process, so aren't reporting to the SBA. Is that a fairly accurate statement?
Yeah, I think, I think probably all of the lenders treat applicants to the consortium as any other applicant. So they'll come to us and then that due diligence will begin. But this is just, an easier way for people to find a lender and an easier way for a lender to just take a preliminary review of some information and make a decision as to whether they want to continue that conversation.
Okay. So the loan is given at the rate that the bank and the applicant agree to. How are lenders approved to be on this list?
When we originally began, we looked at banks that were doing SBA loans. We also had and continue to have relationships with the other lenders in the area. So you'll find all of the community development financial institutions who do small business lending part of this consortium. We also work with organizations like North Philadelphia Financial Partnership that may not, which I don't think were listed as a CDFI when we originally did our outreach. And then other banks have approached us, and at least one online lender approached us, and we look at, are they in this just to make money, or are they in this to also have a benefit to the community? So that online lender that I mentioned gives their interest rates up front. There's no prepayment penalty. They do everything that they're supposed to do in making sure that the business is not getting in over their heads. So we look at it from an aspect of, is this a benefit to the community and to that small business?
So there is a selection process. In other words, not just every lender can get involved in this program.
That is correct.
I looked at your list of lenders. I see United Bank is on there, United Bank of Philadelphia. I did not see that any Asian banks were on there, like Asian Bank of Philadelphia, HSBC, that do a lot of loans to small businesses. Did they apply?
They have not reached out to me as of yet. If you have any contacts, I'd be happy to talk with them.
Right. I will. And this is available multilingual?
Not yet.
But it will be.
I believe that our outreach documentation, we will try to make multilingual, and I will take a look at the application to see if it can
Certainly
be
Spanish,
turned
right?
into-
I would think, at least Spanish, and then we can go from there.
And we also work with, we work extensively in commerce with our Office of Business Services, who have language skills in both Spanish and Mandarin and other languages. I find that this process works best if you're a small business who has never loaned or obtained a loan before. It's worth it to work with someone who can go with you and kind of fill out that form with you in person. So even if the form isn't translated, you're at least working with somebody who'll be able to go with you and answer all the questions that you have as you go through the lending process.
Okay, I'll just make just one comment, and I appreciate your answers. I was on the board of First Commercial Bank of Philadelphia, which was the first Asian American bank in Philadelphia. It was successful. Eventually, it was sold to HSBC. The reason is that the Chinese in particular and Asian population could not get loans at regular banks because of language and other things. But the bank itself knew within the community who was doing business, what their, quote, credit history was, and was able to basically give loans, quite frankly, at higher rates because they couldn't get a loan anywhere else, and developed a very successful lending practice. I just wonder that there isn't a way, since it's in the neighborhood, that for some of the kind of system that the folks in the neighborhood can have a process. The banks may not do this. They may not reach out to the CDCs or to the district council members or to some of the different organizations to give them some historical background or credibility that this program might be, very ideally suited for. I do think about the different lending entities within the ethnic communities that are informal, that have been historically successful, and this program seems to be something that could incorporate that into providing successful loans to many folks like that. But thank you very much.
Certainly, thank you.
Just very quickly, Councilwoman Parker, then we're going to head this way.
Mr. Chairman, thank you so very much for just allowing me to come back with one comment that's extremely important. As I listen to Councilman O talk about the lack of access, and one bank in particular, and again, I won't reference the name because we all have a right, should have an opportunity to redefine ourselves, but I ask that we keep in mind Councilman Dom's comments relative to sort of marrying the training, access to the counseling, the 10,000 small K, the power up, along with when you apply, because what we don't want to do, especially for people who have less than perfect credit, whereas we know we are going to pay a little bit more, we don't want them gouged. And I've seen people bearing great gifts coming to communities that have not had traditional access to banking. And you say, okay, I want to get started. You know, you're excited. You know your plan works. You're here. You know, you want to grow. But then before you know it, you've gotten access to a financial product that is literally taking you out of business because you can't afford it. So I ask that you be very mindful of that. And if I seem a little passionate about it, let's just say I've seen small business owners along with individual homeowners who suffered a great deal from someone offering a product that is supposed to save our community. So thank you.
Councilwoman Parker, that's really good insight, along with what Councilman Dom has said. Good credit or less than good credit you pay for in many different ways. And I think Councilman Dom's comment is that sometimes when we are so desperate to take on debt, it actually defeats the purpose and we wind up going under. So good comments. I'm gonna go with Councilman Green and then back to Tollenberger and Dom.
Thank you, Mr. Chair. I want to thank Councilman Parker for reminding me I'm still old school, because when I'm in church, I see everyone take out these things, and I still take out my old weathered Bible I've had for decades. But what I wanted to say in reference to the Capital Consortium, it seems like we've had our first phase, which is coming together, getting the various institutions to even agree to a uniform application. Now we're kind of in the second phase where we're starting to now get to automation. The next step is the third phase, and that's really getting the word out about the Capital Consortium. And there's a couple things I wanted to get your thoughts on that we've discussed. One, I know you've had conversations with Nicole Westman and those from Rebuild. I think it's important that for those who are going to be subcontractors to the program managers under Rebuild, now is the time that if you're a small business owner, you need to get your kind of stuff in order to be able to take advantage of Rebuild. And it's the access to credit. So I know you've met with them early part of this year, and so the concept of having Rebuild as part connected with the Capital Consortium, and even maybe some of the William Penn dollars being used as some type of loan guarantee or loss reserve can be used for some of the subcontractors through Rebuild. So I'm curious about that aspect from you. And then the two final points, some type of loan fund with all the new banks coming into the city. Is there maybe some way of creating some type of loan fund that the various institutions in the Capital Consortium can benefit from? Because if I'm a FNATA, or if I'm North Philadelphia Financial Partnership, or WORC, and I'm going to do lending up to a certain level, maybe there's a loan fund I could tap into to be able to do more loans, which will then provide me with the more ability to do more loans and grow my profile as an institution to do even more loans for small businesses around the city of Philadelphia. And then third, how do we really get the word out about the consortium through marketing? And are there ways that we could partner with some of our historical banks on how they can help provide resources to help market this initiative, because the city is limited from the dollars that it has at its disposal, but maybe there's some type of public-private partnership we can work on regarding marketing. So I'm curious about your thoughts on those 3 points.
Well, thank you very much for the questions. For the first one about our outreach with Rebuild, we are talking with the small contractors who have attended those outreach sessions. So we had one in Councilwoman Parker's district a couple of weeks ago, had one in Council President Clark's district. We've had them 5 so far, and we have another one coming up this week as well. So that's part of that outreach process, to get the word out about the steps that the contractors are going to need to undertake in order to access capital down the road. With your second question about, actually I'm going to talk about outreach first. I think that that's the next critical step for the Capital Consortium, is finding out the best ways to get information out there and to target the businesses that are poised to take advantage of this. So I think that it's still going to be, just my personal opinion, mostly local papers, because you're trying to engage business owners who aren't subscribing to some of the Philadelphia Business Journal or some of the other publications that are out there. We want to target this towards the businesses in the community so that they can take advantage of the program. But I'm happy to discuss with, we discuss it internally all the time, but happy for council's feedback as well on the best ways to get the word out to the small business community.
Councilman Heenan has a point of information.
Sure.
And you know you're hot when you have all these lights lit.
Right. So, point of information or personal privilege. I still have a vendor session for rebuild, for opportunities that's in my district. I would rather have you guys, the consortium, get ahead of it and join as opposed to follow up. All right, this way people know why they're there, while they're receiving the information, that they actually have the information, that there are other opportunities to help secure making their decision on moving forward, as opposed to sitting back and waiting for the phone to ring. So that's just a part of how Philadelphia Grassroots Network works, and really giving people, the opportunity to grow and be successful by using the great resources that you have, and the success stories, I think, is phenomenal. But partnering with the city and being a true partner in our communities, I think really will help if you're actually, maybe you are there, I don't know. But if you're not, I'm asking you to join.
Is that the one on November 2nd?
It is.
I will be there. I've
Perfect.
gone to all 5 of the outreach ones, and I can also expand a little bit, because mostly I've been talking about the Capital Consortium, but I can talk about some of the other commerce programs that the contractors might want to take advantage of, because contractors would be interested in doing work on businesses who are going through the storefront improvement program as well.
Commerce does it. Look, no slight to anybody else, but Commerce does a fantastic job with PIDC, with their business portal coming out, with their business networks, and really doing a fantastic job on our commercial quarters as itself. I think the consortium, being an add-on, right, and a partner in this really sends a message that we're serious about opportunities and growing here. So thanks.
Thank you, Councilman. Councilman Tollenberger.
Mr. Chairman, thank you, and also thank you for calling me the historian. Ford Motor Company, Hewlett Packard, and Apple Computer all have one thing in common. They all started in a garage. So the word to the rest of the world is, beware of the American garage. You don't know what can come out of it. And that goes to what Mr. Councilman Heenan had said earlier. It's sort of, in addition to, what's that? Yeah, well, I said that. Oh, I'm sorry. It's on here. So you get it right. Ford Motor Company, Hewlett Packard, and Apple Computer all started in garages. I'm interested in the Philadelphia garages, and not for L&I. There's not an L&I hearing, but Mr. Snyder, what is the one thing you're doing as it relates to this program to get companies out of their garages and keeping them in Philadelphia as best you can? I mean, how are you getting that really small potential manufacturer or small entrepreneur that wants to start something and essentially is working out of his or her garage right now?
Thank you very much for that question. The Capital Consortium seems to work best for those existing businesses that has some cash flow that can be measured, so that they can, the lending institution can figure out how much of a loan they can afford to take. I'm also working with some of our maker manufacturer community on a number of outreach initiatives. We've hosted different lending sessions with them, and I appreciate Councilman Green for having the hearings on the maker community a few weeks ago. And what we've heard from them, one of the first ones that we held was at Globe Dye Works, and I'd thought that the businesses would be all about the capital. And what they said was, you know what, we can get loans for capital products. What we can't always get is working capital money to go to a vendor fair or something that's not tied to a hard fixed asset that can be depreciated. So we have been working with that community, continuing our outreach to find out what specific other things that they need. in order to figure out how we can best help them. So the Capital Consortium is not going to work for all of those small businesses, but I would like to turn all of the maker businesses that don't have employees into employee businesses, and that's another part of what I'm working on. And don't have any more information, but I am aware that the needs of that community are a little bit different. I think we're going to need to get more angel investors, and I think we're going to try and find a way to connect businesses to other investors as
Right.
opposed to lenders.
Well, thank you. There may be some businesses that are working out of garages that might have an employee or a half of an employee.
Absolutely.
And, don't discount them as well. They're real. And
Oh,
this has
absolutely.
always been a great city for entrepreneurism, and they have to start somewhere. And many times they start in a garage. And the 3 companies I mentioned, look them up. They all start in garages. So.
Absolutely, and we're trying to do our best to reach out to those groups as well. And again, if you have any ideas on where we can go to reach out and how we can best
Sure.
connect with them, please let me know.
Well, I would appreciate what you're going to send to Chairman Jones, the letters and the correspondence you have. That would be very, very helpful.
Will do.
Mr. Snyder, thank you very, very much. And Mr. Chairman, thank you.
Thank you, Councilman. Councilman Dom?
Thank you, Mr. Chairman. My comments aren't necessarily for the panel, but it has to do with my theory that we can either give people fish or we can teach them how to fish. And when you look at the statistics of Philadelphia, it's not necessarily for us, but this is maybe for the school district and our administration. We have a city that's 26% in poverty. We have 81% of the kids in public school in poverty, 81%. We have 91% with one parent. Of the businesses in Philadelphia, entrepreneurial businesses, 76% are white-owned businesses. 2.8% are African-American-owned businesses. That's a problem. And we're not going to fix it today. This happened over time. But a few ideas that we could maybe get the administration and school district on board is 1, teach financial literacy from kindergarten to 12th grade. Teach it. 2, teach in 9th to 12th grade, not just coding, but entrepreneurship. How to own your own business, how to start your business, how to borrow money, all those things that you're running into now. We need to teach it in the school system. And 3, copy the Cristo Rey model, where a student works 1 day a week in a job, entrepreneurial type job, from 9th to 12th grade, so they get the exposure. This isn't gonna solve overnight. It'll take 20 years. I won't be here then, but this is a program that we need to attack now. It's not a Band-Aid. It's something that's accumulated over time. And unless we attack it in that light, we're not going to fix it holistically throughout the city. And thank you, Mr. Chairman.
No, thank you. I think, and agree with you 100%. As we look at all of the opportunities, Philadelphia has been discovered just like your program. We are undervalued by way of real estate. We are 1 day's truck drive between 1/3 of the nation's population. We have great restaurants, tourism, sports teams now, we can claim them as well, and a great quality of life. And so change will happen. And the question becomes, how do you prepare for that change? The gold watch at the Bud Company is less and less. The entrepreneurial, I subcontract with a Bud Company is more and more. Millennials get this, but in order for us not to be Seattle, where great migrations and relocations happen because the people that were there weren't prepared for the future, should not be visited upon this town. And so what you're doing is critical in that. What Councilman Dom talked about, preparing our young people to take advantage of these entrepreneur opportunities, is essential. But access to capital is a critical part of that. And I'm so tired of meeting people in Seattle that used to be from Philadelphia but moved because they sought opportunity elsewhere. We have to create those opportunities right here. Are there any other questions for this panel? Seeing none. Oh, seeing one. Councilman Green. Oh, we're going with the next one? All right. Ms. Williams, can you read the next resolution? Thank you all for your testimony.
Thank you.
Resolution number 161118, a resolution authorizing the Committee on Commerce and Economic Development to hold hearings regarding the JumpStart initiatives throughout the city of Philadelphia.
Chair now recognizes Councilman Green, the author of the resolution.
Thank you, Mr. Chair. I just wanted to give a little opening remarks on this next resolution, and this initiative was something that was the brainchild of my friend Ken Weinstein, who really has done a lot of work in the northwest part of the city, and really I think he came to a perspective from my analysis of not seeing enough developers of color and women developers in the city of Philadelphia really taking advantage or having access to the development work that was going on in the city of Philadelphia, and trying to replicate other people like himself and providing some of the training and opportunities, and actually even putting his own lending authority online to really help develop the next generation of developers. And I've seen some of the work they've done. Did a tour, and I think I saw the Chief of Staff for State Representative Steve Kinsey, Stacy, right here earlier, and we did a march in part of Germantown. I could see houses that I knew were probably redeveloped as a result of JumpStart, and it's really providing opportunity, once again, for economic development for someone that may work for the city of Philadelphia, or a barber, or someone that is a CPA or owns a beauty salon, who really want to participate in this dynamic that's happening here in the city of Philadelphia from a real estate development perspective, but don't know how to source a property, don't know how to deal with contractors, or make sure that they have the right financing. So this is a really important opportunity to give the ability to people throughout the city of Philadelphia to become a possible real estate developer and maybe change their career from working for someone else to working on their own. So I want to commend Ken for creating this initiative in Germantown. It's grown, and hopefully it's an opportunity for it to grow across the city. So thank you.
Thank you, Councilman. Ms. Williams, will you read the titles of the next panel to testify on this resolution?
Gabriela Somoza, Jordan Paris Ferrarini, Joshua Jones, and Ken Weinstein.
So we won't tell Councilman O'Neill that you stole his seat. We'll just, hopefully you won't look at that.
Okay.
All right. Are you going first, Mr. Weinstein?
Yes.
Welcome.
Great, thank you very much. Good morning, Chairman Jones, members of the City Council's Commerce and Economic Development Committee. I'm Ken Weinstein. I'm the founder of JumpStart Germantown, president of Philly Office Retail. We're commercial real estate developers, owner of Trolley Car Diner in Mount Airy, Trolley Car Cafe in East Falls, in Councilman Jones's district, and the soon-to-open Trolley Car Station in University City. Thank you to Councilman Green for this opportunity to talk about this exciting program and its expansion into other middle neighborhoods in our city. A little more than 2 years ago, I created JumpStart Germantown to help recruit and support aspiring real estate developers so they can remove blight in their own neighborhoods. I've been working for the past 29 years to reduce blight and increase investment in Germantown community and its surrounding neighborhoods. JumpStart Germantown is just my latest tool to design to remove blight one house at a time. By offering opportunities to local entrepreneurs and investors, JumpStart benefits the whole community, developers, community stakeholders, and longtime residents alike. Through JumpStart Germantown, we're changing the face of real estate development. I go to a lot of real estate meetings, as I know Councilman Dom and many others do, and a very large majority of the participants at these meetings are white and male. We hope to start changing that through the JumpStart program. JumpStart works because people in the community are investing in the community, keeping wealth local, which also keeps gentrification down. After renovations, formerly vacant properties go back on the tax rolls, providing the city of Philadelphia with much-needed financial resources. JumpStart Germantown improves neighborhoods while keeping gentrification pressures to a minimum. Notice I didn't say not having any gentrification, because we know it's going to exist if we develop and improve our neighborhoods. JumpStart encourages scattered site rehab projects instead of large-scale urban renewal by renovating properties that are scattered throughout a community. Again, you keep gentrification down rather than knocking properties down and building large-scale development. JumpStart also creates a healthy mix of affordable housing and market rate housing. People often ask me, are you encouraging rentals? Are you encouraging for sale properties? The answer is yes. By encouraging a variety of different types of housing, again, you're keeping gentrification down so that longtime neighbors can stay in a neighborhood. JumpStart model of development embraces slow and steady growth for middle neighborhoods, rejecting the idea that investors should focus on so-called hot neighborhoods. I know that's the current thing for developers to go into the hot neighborhoods. They see the quick profit, they see quickly appreciating properties. That's not the model that we're trying to follow here. We're certainly not stopping our JumpStart mentees from going in that direction, but someday soon, and we don't know whether it's 3 months or 3 years from now, the bubble is going to yet again burst, and I don't want to see my mentees get stuck in that bubble. And by investing in neighborhoods like Germantown and other middle neighborhoods where there's more slow and steady growth, we can encourage them to see moderate profits that will not go away when the housing bubble does burst. JumpStart Germantown has 3 initiatives: a training program, the Developers Network, and the loan program. I started JumpStart to respond to a need in the community. I was fielding calls and emails almost daily from newbie developers who were seeking a mentor to guide them through the process. And I was giving them 1 hour of training, which wasn't much of training, and I realized what happens if I start saying no to people that are seeking 1 hour of training, and really all I'm doing is rooting them on and encouraging them. What if I start saying no to people who want 1 hour of mentoring and instead put together a program that offers them 9 hours of training, which is exactly what we're doing. What we do is we go through the 7 jump steps of real estate development, as we now refer to the process. And again, what I tell them very clearly, everyone going through the program, is that 9 hours of training is not going to make you a real estate developer, but you know what? It's 9 hours more training than I had 29 years ago, so it's a way to get people started. The second part is the Developers Network, which Councilman Dom and Councilman Green spoke at our last meeting a couple weeks ago when we were very well received. We had over 100 people present. We do these meetings 4 times a year. It's a way to connect the community, connect newbie developers, and connect experienced developers. So that's really the purpose of that. The loan program, and probably the most important part of the JumpStart process. And it's the most important part of the JumpStart process because what we're doing is providing loans that you can't get elsewhere. We're providing loans to newbie developers. I know banks don't want to do that. I'm one of the founders of Valley Green Bank up in Mount Airy. I sat on the loan committee for 8 years, so I know firsthand that those are not loans that banks want to do. We're providing relatively small loans. Our average is around $100,000. Again, banks don't like, particularly the large banks, don't like to do loans of that size. We're also providing loans for acquisition and construction. And for those of you who know banking, construction loans are considered messy loans. And again, banks don't want to get into that. So what we're trying to do is provide the loans that can give newer developers a jump start in the process and can give them a track record that then in the future they can go to banks and start getting their own loans. Our loans range in size from $45,000 to $500,000. We have already in 2 years put $5.3 million on the streets in terms of loans. 1.5 million of that have already been paid back. And we have no, knock on wood, we have no bad loans to date. So we're very proud of that. And that's partly because we have a relationship with each of our borrowers, and many of them have gone through our training program. I'm not going to get into it right now because I know that Lisk is going to testify later, but I'm very excited about the next phase of JumpStart Germantown. We're already putting together training booklets and how-to guides and ways that we can replicate JumpStart into other neighborhoods, not just in the city, but around the country. So I'm very excited about that. So thank you for having us today.
Amazing. We'll let the rest of the panel testify before I ask the question. Why did you take this direction? Before I do, because everybody else asks questions and we want to get through it. But put a pin in that, because that's amazing to me, because you had a whole nother concept and path. So we'll let everybody testify then you come back with that.
Okay.
Good morning, council members. My name is Jordan Parisi Ferrani. I'm the executive director of Trades for a Difference. First, I just want to thank you all for allowing me to be here to speak today. I grew up in the Mount Airy section of the city of Philadelphia. I always had an inkling of who Ken Weinstein was. I wasn't able to meet him up until the point 2 years ago when I enrolled in the JumpStart Germantown program. And upon entry, I immediately took a liking to Ken. I received him very well and felt that he was someone that was genuinely trying to help. So I underwent the JumpStart Germantown training program, where I learned a wealth of knowledge in relation to the real estate industry, and it really helped me refocus my efforts to get my real estate investing career underway. During my time in the program, I was able to meet with a lot of my community members and neighbors. A lot of them all had the exact same feeling as me. They felt like the program was of real value. Everyone had a great experience going through it. The biggest thing for me in dealing with the program was just the overall access to Ken himself. I mean, I instantly saw that he was really a genuine guy and was really committed to his efforts in helping and aiding everyone kickstart their career. And that was reiterated on multiple accounts and, of course, throughout my community and friends and relatives from all over Mount Airy and Germantown as well. We learned a wealth of knowledge, but then also we were put in positions to be able to gain access to a relatively easy loan to get involved, to take on. And there wasn't the red tape that came along with a lot of other institutional loans. The barriers were minimal, and it was all overall a really easy process for us to take advantage of. I was able to take advantage of the loan and just all of the training myself and some of my own efforts in my neighborhood and really make a big impact in my own community through purchasing and repurposing of 2 blighted properties on the 2 Avenue corridor in the northwest section of the city. We were able to stop a stop-and-go beer store from opening and repurpose it as a community educational center where we're doing job skills training and entrepreneurial learning programs for at-risk youth and young adults in the city, ages 16 to 24. One of those primary programs that we're running out of that facility is around construction, which is very closely related to real estate development. I grew up in the trades. My mother's a designer, my brother's a designer, my family members are all tradesmen. God's blessed me to be able to obtain a lot of successes in the construction industry. I've been nationally awarded, published in magazines, newspapers for my involvement in the trades industry. So through this loan and through this program, I've been able to then turn around and offer my helps and supports to my community in providing educational trainings around the construction industry. And honestly, I probably wouldn't have been able to do it in the same timeline, the same capacity without Ken and JumpStart Germantown. We were able to act really, really fast on purchasing the blighted property that was soon to be a stop-and-go beer store. We were able to put together a construction loan that was very comprehensive and manageable that allowed us to get everything rolling and underway relatively quickly. And through this process and through this loan and just the interactions with JumpStart, I'm now able to redistribute opportunity to the neighborhood as well. So Ken shared a wonderful opportunity with me, and that flow of opportunity is now outpouring to the community through my efforts now as well. And that's a very, very critical thing, and just developing and sustaining and developing our communities from within is that flow of opportunity. So we're truly thankful at Trades for a Difference for Ken and all of his supports. He's genuinely been there every single step of the way. I mean, I can really attest to the fact that I've emailed Ken maybe 9 p.m. at night. He's responding by 2 o'clock in the morning. On every occasion, I don't think it's ever going past 12 to 18 hours, which was someone of his stature and his accomplishments, that's pretty much a rare find. Ken's definitely been very genuine and giving game for free, where others would probably, advise against. Essentially, he's developing, quote unquote, his own competition. But he definitely doesn't see it that way, and he's been very, very supportive and helpful in our efforts, and it's been a great thing. We've also been able to restore a blighted property that was an abandoned house in the community for about 15 years through a JumpStart Germantown loan. That property sat there vacant for 15 years. Drug activity was going on rampant in that area, and we were able to take advantage of the JumpStart loan to be able to bring an end to that as well. And through all of this, we've been able to educate young men and women in the community with construction skills and construction know-hows, mentoring, and overall life skills training. So that flow of opportunity has been incredible, and I can't say enough great things about JumpStart Germantown and Ken Weinstein, and I definitely applaud his efforts, and I'm so happy that we've been able to be involved with him and even be a part of this today.
Some great philosopher and Councilman Dom said, give a man a fish, he'll eat for a day, teach him to fish, he'll eat forever, and we agree. So we will ask questions at the end of everybody's testimony.
Hi everyone, my name is Gabriela Somoza and I am a co-owner of S7 Real Estate. Thank you Chairman Jones, members, and the committee and the sponsor of the resolution, Councilman Green. I moved actually from New York to Philadelphia in 2014 with my brother in hopes to take our savings and leverage it. He's experienced in the real estate market, having worked for developers for the past 15 years, and thank you. And I had a background in finance. Together we wanted to create a business that would secure our family for the future. We purchased our first property in Germantown, an old house on East Haines Street. It was quite run down and had enormous possibilities. This property, we worked on a shoestring budget. We traveled back and forth from Philadelphia because at the time we weren't living here. We were doing a lot of the construction ourselves to the best of our abilities, and most weekends, believe it or not, we slept on the construction site. It wasn't luxurious, but we sacrificed because we were relentless when it came to starting our business. As we worked through the rehab, we got to know some local businesses in the community and met Jimmy Reed, which to this day is probably one of the best conversations I've had in the Germantown community, just because he told us about the JumpStart Germantown program as well as Ken Weinstein. We were incredibly excited, and I applied for the mentoring program, and I was accepted, and I actually was in Jordan's class. So our first loan was for a house on Rubicam Street, and we were trying to restore that property to what it used to be. The property is actually a duplex, and both apartments have beautiful bay windows, which basically allows for wonderful natural light in the mornings. It has the original fireplaces and was a great property to kind of bring back to life. We had our struggles. Contractors didn't perform or overcharged for work or disappeared for days on end. We faced construction challenges that were unexpected and needed more capital to continue our projects based on our original estimate. And that's really where JumpStart Germantown came in. From every mentoring session, I took away valuable advice to help sustain our business. And that's the goal, not just to start a business, but to sustain a business. In many cases, the program is not just about helping people like us buy a house. The program is helping us manage houses, but also our business. To date, we've opened and closed 4 loans on 4 houses through the JumpStart program, and we plan to start our 5th this month. The loan program allowed us to keep going. We had established a relationship with not just Ken Weinstein, but each member of the JumpStart team, and worked together to make sure inspections ran correctly, construction inspections ran correctly. Having that backup support from people who want you to succeed is invaluable and hard to find. This is a really tough business and has a large amount of risk associated with it. We're putting in part of our own capital as well as, taking on a guarantee from JumpStart Germantown, and, with risk, there's always things that could go wrong. Having a team behind you to answer questions, explain legal documents, decipher financial metrics is incredibly helpful. The most important thing I'd like to say about this program is it helps people like us succeed. It restores beauty to the Germantown neighborhood. We employ local workers, we support Germantown businesses, and it facilitates success stories like ours. An idea brought my brother and I here, but the truth is programs like JumpStart Germantown are the reason that we stayed in the city of Philadelphia. Thank you for your time.
Thank you for that testimony, and we will complete this panel with you.
Okay.
Pull the mic to you and state your name and begin your testimony.
Okay. Good morning, council members. My name is Joshua Jones. I'm co-owner of Greater Good Developments, LLC, and thank you all for the opportunity to speak today. 2 years ago, I received an email from my cousin about a program being launched in Germantown, and it was designed to train and mentor novice developers and eventually provide them with loans to complete residential rehab projects. After reading the article, I immediately emailed Ken Weinstein demanding to know the details of the program. And to my surprise, he responded immediately, informing me that JumpStart Germantown was still in the planning stages, but he appreciated me reaching out and he would be in contact with me in the near future. A few months later, I attended the first Developers Network meeting where Kim provided the details of JumpStart Germantown's mentor and loan programs. The details were almost unbelievable. JumpStart Germantown was going to put a class of students through its training program free of charge and pair us with highly qualified mentors who would guide us through the real estate development process, also free of charge. The best part is that there was a loan program in which the graduates would be able to borrow money to finance their projects. Now I thought to myself, what businesswoman or man in their right mind would train, mentor, and finance their competition? It almost seemed too good to be true. I even had some friends tell me that they thought it was a scam, and I'm here today as proof that it is not. The education portion of our training included learning how to analyze deals, cost estimating, buying materials, basic real estate math, creating development budgets, taking bids from contractors, hiring contractors, firing contractors, and hiring new contractors. And this is all pertinent information was being provided to us free of charge by one of Philadelphia's most successful real estate investors. One of the most important things I can say about JumpStart Germantown's mentor program is that you're never alone in the development process. There's no problem you can encounter that another more experienced developer hasn't dealt with. Problems also often arise out of nowhere, and because of this need for instantaneous help, JumpStart Germantown created the Developers Network. The Developers Network is a group of hundreds of local investors that share information, advertise services, and assist each other when in need. In an industry that often prides itself on secrecy, the Developers Network inspires a collaborative approach where individuals assist each other throughout the process. JumpStart Germantown promotes communication between its graduates, realizing that there is no one developer who can rehab every property in a neighborhood. Sometimes it's in two developers' interest to work together to promote faster growth in a specific area. Ken once told me that he wished that more developers would think about working together collaborate to grow the pie instead of trying to have the pie all to themselves. This is part of JumpStart Germantown's investment philosophy. Real estate is a highly competitive business. The real estate industry is flush with so-called real estate gurus and experts that charge people thousands of dollars for the secrets of real estate investing. Many of you have probably attended these seminars in some hotel conference room, and at the end of the presentation, you're always asked to take out a checkbook and pay thousands of dollars for these secrets of real estate investing. I've watched my friends spend their entire life savings paying exorbitant fees to participate in these programs, only to be told once they got in, to get to the next level of the program, they would just have to pay a little bit more, eventually realizing that they had been taken advantage of and would not get their money back. This happens all too often to the most vulnerable people in our society, especially young, eager investors who are looking for their big break into the industry. This is the importance of JumpStart Germantown, especially in Philadelphia. Ken Weinstein is tearing down these barriers to entry and providing the community with the life-changing information free of charge with no strings attached, no next level to get to, no bait and switch. Just the faith and the belief that if you provide people with the proper resources and guidance, they can succeed against the odd. And we're living proof of this. In my opinion, the most critical factor of JumpStart Germantown is the loan program. This is where the program delivers on its promise, where Ken's actions meet his words. You see, I've been to all the conferences and the seminars, I've read all the books, I've attended countless networking events. When all is said and done, you need money to make your real estate dreams a reality. People will talk to you for hours about being motivated, educated, having a great business plan, and so on, but are they really willing to part with their precious dollars to show you how much they actually believe in you? JumpStart Germantown puts its money where its mouth is. Most novice investors won't get their projects financed by banks, so many are left to deal with hard money lenders who charge exorbitant fees and interest rates, often as high as 16%. I've been in one of these loans. Knowing that most new investors have few options for financing, they capitalize on our need for money by giving us terms that some may consider predatory. My first JumpStart construction loan was priced at 6.75% at 85% LTC, which is almost unheard of for a construction loan. Because we were flipping the house, there was no credit requirement and the appraisal was waived. Again, Ken Weinstein tearing down the financial barriers to entry, improving the quality of life by removing blight and helping entrepreneurs like myself achieve our dream. And I just want to take a very brief moment to talk about what JumpStart Germantown means to me on a slightly more personal level. You see, I come from a neighborhood in lower North Philadelphia called Brewery Town. I was raised on 29th Street near the intersection of 29th and Master. And if you follow the news, you know that Brewery Town is going through a massive gentrification process right now. Land is selling for as much as $100,000 for a 1,000 square foot lot, and some prices are priced into the mid $400,000 range. Anticipating the coming change several years ago, I took the very limited resources I had and purchased as much property as I could in Brewery Town. All of my deals were profitable on paper. My loan application was perfect, my credit score was far above their stated requirement, yet no banks would finance my projects. I was even denied money by a hard lender. And I thought to myself, maybe I didn't have enough experience, but my counterparts didn't have experience either, and their deals were getting financed left and right. Banks have really eloquent ways of explaining to you that you're denied, but at the end, you know that the answer is just no. So I had to sit on the sidelines and watch a bunch of guys from New Jersey come into my neighborhood and build and establish generational wealth for their families while I had to watch. So they were no more talented or intelligent than me, just access to resources and capital. The tension that you see at community meetings is about more than parking spaces and variances. People are fed up with being spectators in their own communities while watching people from the outside come in and profit and extract wealth. People want to participate just like everyone else and build legacies for their families. This is why JumpStart Germantown is so incredibly important. The program acts as a catalyst to help bridge this gap and provides a real opportunity for those seeking to improve their lives in the neighborhoods that they live in. I hope that you place your support and any resources at your disposal behind Ken Weinstein and this amazing program. Hopefully we can help it grow and spread the opportunity to other areas of the city and hopefully the country. Thank you for your time.
Mr. Jones, I just want to say, whenever you come in these chambers from now on, do not take O'Neill's chair, take mine. Yeah, really. Yeah, we don't do claps. It's not that we don't appreciate testimony, but we kind of have to sit back here and be stoic. But I want you to know that I think you put your finger on a lot of the feelings that a lot of my constituents always talk about. And Brewerytown is a stone's throw away from 40th and Girard, where my district starts, and I'm watching how the fact that Philadelphia has been discovered, Ken, that the fact that property values are still below what you would pay in DC or New York and other places, that speculators that aren't born here, that didn't have to go through the bad times, are coming and doing just that, not just to Brewerytown, but if Kenyatta Johnson was still here, or Council President Clark, he will tell you that we've been discovered. And you can't always make your neighborhood undiscovered, if that's a word, but you can choose to invest in it. And I'm appreciative of that how to get it done concept that you're putting forward. And we would love to spread that to other neighborhoods. My daughter, and I'll end on this, graduate of Lincoln University, master's in finance. I'm telling her all these wonderful ways for her to move out my house. and her husband, to their credit, went to the sheriff's sale, bought a $4,000 property, not necessarily in a neighborhood or my district that I won't say what district it is, but have flipped that, and that property is now worth upwards of $100,000. And I was very proud of my daughter at that point because she moved out. But think about that. If probably the largest single investment any of us make, other than millionaires or 100,000aires, is a home. That's the big investment. That's been that way for some time. So to hear your success story gives us hope. It also is a cautionary tale, a how-to tale, but a cautionary tale of what to look for in these rising neighborhoods that our people are discovering. So thank you. I'm gonna go with the Councilman Green, and then I'll go to you, Councilman Dowd.
So your daughter's success was a product of great home training?
Not at all. It was a product of, I love my daughter, and it was time for her to grow and go.
And also being an alumnus of the Lincoln University.
That did help. She could count. She was good at math. So.
Thank you all for your testimony. I think this is really great, and one of the things I want to do is use this here as a way of exposing more people to what's going on with JumpStart. I know you're expanding to other parts of the city. I'm curious from the perspective, if you can kind of give a profile, kind of who is, if you can, the average participant, and then also how can the city partner with JumpStart to make it more successful?
I don't know if there's something particular. In your introduction, you said I'm training the next generation of real estate developers, and I used to say that too also 2 years ago. That's actually not true anymore, because you'd be amazed that we are getting retirees. This is not just about young people. We're getting people who are contractors that would like something more. We're getting realtors that would like something more. We're getting a number of people who know one or two of the 7 jump steps of real estate development, but clearly don't know all 7, and they need to know all 7 to become real estate developers. So more than 80% of our mentees or graduates from the training program are women and or African American, and we're very proud of that. But there is nothing consistent. We have people who come in with money ready to go. We have people that still need to accumulate money and ready to go. We have people with great credit scores. We have people with lousy credit scores. So it really is diverse. That being said, and I wanted to point this out, Councilman Jones, we have already put 18 of our graduates, 211 graduates so far, come from your district, and we have 40 total applications. Councilwoman Parker, 21 of our graduates, again, out of 211, come from your district, and we have 45 applications total, so we will get to the rest of them. Most of the rest come from Councilwoman Bass's district, because that's Germantown. So we are giving some preference to Northwest Philly, because we know they're more likely to start in Northwest Philly, and that's what we want them to do.
And then also, how can the city partner to kind of make JumpStart more successful?
Say that again?
How can the city partner with you and the initiative to make this a more successful initiative, to kind of spread, for lack of a better word, spread the wealth and knowledge to other parts of the city?
Thank you for that question. One is, and why I think we're here today, is we would like to be hooked up with leaders in other communities that are ready to jump on this. It could be community development corporations, it could be other developers, it could be just people who care about the community that want to pick up the training workbook and run with it. It doesn't have to be people with a lot of expertise. That expertise exists in your community. So that's one thing that we would love for council members to help with. Two is provide no strings attached money. I know that's hard to do when you're the city of Philadelphia, but that's how we got started, by me taking out a $2 million line of credit and starting to put that money on the streets. I was able to do that. I was able to be effective. I was able to approve loans within 3 days and settle a week later, because we have no strings attached money. Once you attach those strings, and I know that's necessary in a lot of cases, then those approvals become 2, 3, 4 months later. So we're trying to make these loans look like cash, so that when you go and buy a deal, and as Josh said, he's competing with South Jersey developers who do have cash, so if I can give them a loan and they can go and say we're cash buyers, they're more likely to be able to buy that property. Third is, and I know this is a hot topic in City Council, but the hardest part of being a developer and being a newer developer is sourcing properties. So anything you can do to get properties through the land bank faster, to, you know, and I know this is talked about endlessly, but we have hundreds and probably thousands of people that are ready to go if they could find that first property. And the city has a lot of these properties, and we can give them the money, we can give them the training, but they need the property to get started.
Okay. Thank you, Ken. I just wanted to follow up to the other speakers on the panel, to Josh, Gabriella, and Jordan. In fact, Jordan, I think I know exactly what property you're talking about that you're working on across from Pleasant Playground, because I drive all around the city, but I also drive in my neighborhood a lot. And when I saw some of the renovations, I had a feeling this was a project that had come through JumpStart. So thank you for the work that you're doing. But for the three of you, where do you see yourself going in the future? Because the challenge is that with this initiative, now there's only one candidate, and it's how do you scale this? And that's a question I have a little bit for the next panel. But where do you see yourselves in the next couple of years in reference to this type of development? Do you see yourself doing additional real estate development, going to commercial development, and how do you see that going forward as a result of JumpStart and the network you developed?
Thank you for the question. On a personal level, for myself, I see myself continuing to develop in the northwest section of the city. That's home. That's where a lot of, I feel that my personal efforts are needed. We're definitely just going to keep on scaling up operations and trying to take on, more and more blighted properties as we can. Ultimately, a lot of my efforts are aimed towards the repurposing of blighted properties and turning them into something of need for the community, whether that's a mixed use, whether it's a mixed use property or whether it's for affordable housing. Ultimately, my goal is just to continue taking on blighted properties while using the construction of those properties for an educational component for the young men and women in my program. But we'll definitely stay in the Northwest for now and just keep scaling up and building out as we go.
I'm the same. I think, if you live in Philadelphia, predominantly the housing stock is single-family homes, regardless of what neighborhood you're in. You do see multifamilies, but those are obviously a lot harder to find, except if you're, in Center City. And for me, I also think the retail section of Philadelphia needs to be invested in. I don't particularly want to do that now. I'd like to get a nice portfolio of residential properties, but I do see myself going down that path of, there's a large section of the city that is just all residential, and so the retail side at the same time needs to be brought up, especially to small businesses as well, because there's lots of opportunity here to do that. So for right now, residential and then potentially commercial.
For myself, I'm going to be focusing my developments on workforce housing, scattered site, and hopefully existing projects. I know that there's a need. The 5 houses that I've rehabbed and sold have all gone to first-time home buyers. So I know there's a tremendous market and a need for people who are buying their first home, and there's a lot of new construction in the city, but a lot of that is out of the reach of some of the first-time home buyers. And I've seen workforce housing completed, I think in a West Poplar neighborhood, but the starting prices were around $230,000. And not everyone in Philadelphia who works could actually afford $230,000. So I'm looking at a market slightly less than that for a selling price, but using existing properties to try to feed that need and affordable housing whenever we can. And hopefully, continue to just grow with the city, find underserved areas, and continue to build and grow and help people get into home ownership, because I do believe that this is one of the principal foundations of building wealth and also taking pride in your community. When you just have people renting and you have neighborhoods that turn into rent farms, people don't feel that they have a vested interest. So they're not going to take as much pride and enthusiasm in something that they don't have, that they don't have ownership over. And that doesn't mean everyone is, but I do feel that if we find ways to get people into the houses and the neighborhoods that they live in, they're going to continue to treat those neighborhoods better and feel that their wealth is growing with everyone else's. So that's where I'm focusing my efforts.
Wow. You sure you don't want to come out, Wes? we have room for you. Councilman Don.
Thank you, Mr. Chairman, and congratulations, by the way, to the 3. I'm going to say JSGG, JumpStart Germantown graduates. And what I'm hearing is that you're really investing in a community, and the whole community benefits when each of you invest, because you fill in the community, whether it's residential, office, restaurants, retail, whatever it is. I think of Tony Goldman as the example. I don't know if you know Tony Goldman. He's passed away. He bought all the properties on 13th Street in Center City when it was not really great, but he impacted the whole area by putting in restaurants, retail, residential, which is kind of what you're doing to a degree in Germantown through Ken. And so I applaud that. I think that's great. I also want to call some other statistics, if I'm hearing this correctly. The first panel that we heard from the Commerce Department, there were 74 applications for loans, right? And 11 were approved. It's about 15%. Fulton Bank had 47 inquiries and 2 were approved, which were 2%. And Ken, you have 475 and you approved 211, which is 44%, almost half. Is that accurate? On your part, I think you approved 211 loans so far?
No, let me clarify if I could. We have received 485 applications for our training program so far. We have put 211 so far through the program. We will get to everybody in the next year and a half. So that's the training program. So we're not approving or disapproving anyone. We are prioritizing people to who we think will start developing sooner rather than later in Northwest Philly. In terms of the loan program, we have closed on 50 loans so far over 2 years. I don't have numbers on how many have applied, but I'm going to tell you that we approve 80 to 90% of the people who are applying for loans. We are trying everything we can to say yes. The only times we're not able to say yes is they can't get the site under agreement. There's liens that are preventing the purchase and we need first lien position. Or they're going to buy, rehab, and hold the property, in which case they need to get a loan, a refinance loan to take us out, and they don't have the credit score to get that loan eventually. If they're doing a buy, rehab, and resell, I don't care what their credit score is.
So just to be clear, though, of the people that applied for the program, 485 and around 211 went through the program. Of the 211 people going through the program, you're pretty comfortable those people would be eligible for loans?
Anyone is eligible for a loan. Now and then I will suggest to somebody, you don't yet have enough experience to start your first project, you should go through the program, but that's pretty rare. Okay. We're giving loans to the mentors in our program, we're giving loans to the 211 who've been through the program, but then we're giving loans to community people who believe that they're ready. And if we believe they're ready, they'll get a loan.
And the other question I had for the graduates, are the properties you're renovating, are you keeping them as rentals or are you reselling them into the market?
I'm actually keeping them as rentals. This last property is the only property that I've sold. And I just want to talk about that as well, because I think I've seen a lot of properties in Philadelphia, and I think landlords get a really bad name, and I understand why some landlords get a really bad name. So as far as the rental properties, we pride ourselves on making sure that we're good landlords, quality landlords, managing the property well to a certain standard, absolutely. So
Okay.
for me, it's predominantly rental.
For myself, Councilman, it's a mix. Some are single families that will be resold, where others are, like one we have now is a commercial mixed-use property. So it's commercial first floor, 2-family dwellings above. That property we're actually going to hold on to, and it's actually going to be the first location for our Trades for a Difference educational hub. So we'll be holding on to that. But in the future, I'm imagining it's going to continue to be a mix. Some will be sold, some will be repurposed and held.
Okay.
At this current time, it's a combination for me of both. I would like to focus primarily on selling houses. At this current time, the rental properties do assist with the overhead and the costs that you incur when you start a business and leave work full-time to pursue this. So I do believe that, I'm going to be building a rental portfolio to take care of, cost of living and running the business. And then at the same time, continue to buy houses for resale, because that will be my primary focus.
And so the other,
If I could just add, it wasn't planned this way, but this is typical of the program. We're seeing about a 50-50 mix on sale and rental.
so that to help your line of credit with the bank, if they decide to keep these long-term, do they refinance into more permanent type lending loans versus?
Correct.
Right.
Our loan program is meant to be shorter term, 9 to 12 months typically, where people can complete a project in that time, and if they're going to hold it, they need to refinance. That's correct.
And one of the other factors I noticed, you could say LTC, which is loan to cost, which we're used to hearing LTV, which is loan to value. And I guess, to me, that's kind of an interesting idea, because your risk is probably lower, because there are some people, you mentioned Brewery Town, who bought lots very inexpensively, then get them appraised at a higher number, and then borrow on the whole thing, which makes it a riskier transaction. So that should be shared with the first panel we had, to lend on loan to cost, because it's much more conservative, and you have less chance of default. It's a good program.
Yeah, that's correct. And there are a lot of pieces to why we do LTC instead of LTV. One of them is we don't require appraisals. So if we did, because no one's going to tell me in Germantown what a property's worth, better than I know, an outside appraiser's not going to be able to tell me that. So if we don't do appraisals, then we can do an LTC. If we did appraisals, then more likely we go to an LTV.
And my last comment, not a question, is that you're doing a great job with this, Ken, and you should be commended by all of us, because without you, this would never happen. And I'm not so sure it's duplicatable because we need to find more Ken Weinsteins who can duplicate it. But I hope it is. But you're doing a great job, and thank you.
Thank you, Councilman. Appreciate that.
Councilman Tonberger?
Thank you very much. And graduates, congratulations. And Mr. Weinstein, thank you very much. I mean, very, very much. I think Mr. Jones in his testimony said very clearly that there, and I've seen it, late night television, you turn on television and they'll tell you for X amount of fee, you'll get all the real estate secrets. I'm fortunate I sit next to Mr. Councilman Dom every so often, so I whisper in his ear. But what you said makes absolutely sense. But could you, if you would, just speak a little bit about, Mr. Weinstein, about your program? How does it work? How many classes? Is there a cost at all? Or just give me a little rundown. And
Specifically on the training program?
Yes.
Yes. So like I said before, it's 9 hours of classes. We do it over 3 Wednesdays in a row, 2 to 5 p.m. We bring in a number of guest speakers because nobody wants to hear Ken speak for 9 hours.
Well, I'm not so sure of that. I've been listening here for a while. I can go a little longer.
I'm just not that interesting. So we bring in guest speakers who talk to us about construction, design, property management, zoning. We bring in a banker to talk about loans. My attorney comes in to talk about how to set up an LLC. I think I hit most of them. So we try to bring in experts to also help mentees start to put together their team so that they're ready to develop. You know, because you need your architect, you need your contractor, you need your attorney in order to get started. So like I said, we do it over 3 Wednesdays in a row. Not sure what else to tell you about it.
Is there a fee? Is there a tuition?
So it's completely free.
Really?
And I did that on purpose because I don't want there to be unnecessary expectations. I don't want anyone finishing and saying, that's it? That's all I get for $50, you know? So we purposely don't charge
There's no
anything.
fee, because sometimes I found in Chamber of Commerce work, if you make it completely free, people don't respect it.
And that was the other side. And,
if
that's
you
a very good
charge
point.
a nominal fee, even if it, whatever it is, people are going to say, you know what, I spent $10 for that breakfast with Toltenberger when I was with the Chamber, and maybe I would have come. So it's kind of interesting. Okay, but
So we were nervous about that in the beginning, and I would have changed it if I saw otherwise. But you know what? We accept 20 people in each class, and 20 people show up, and 20 people go through all 3 sessions. If I didn't have that sort of loyalty or participation, I would start charging a nominal fee. Yes.
And how many sessions, or excuse me, how many sessions do you have in a year?
We do it 4 times a year, 20 people per session. We've tried a lot of variations. Originally, Gabriella and Jordan went through a session with 10 people. I realized I'd be going for the next 10 years if I do that. We tried sessions at 40 people, and that was too many. So we ended up at 20 per session.
Okay. And how long have you been
4 times a year, 80 per year graduate.
And how long have you been doing it?
2 years now.
That's great.
Yeah.
And I'd like to sit in on a session if that's possible.
We would love to have you.
Well, I'm going to make a point of it.
Good,
So I'll be giving you my detailed information right after this.
And a number of city council staffers have also asked to sit in. We would love to have them.
I think you're doing a wonderful, wonderful, and I'm going to say wonderful one more time thing. It's great. Very, very good.
Thank you, Councilman.
And Councilman Green, thank you for bringing this all to our attention, because I wouldn't have known. Thank you.
Okay. Any additional questions for this panel? Oh, Councilman Parker.
Thank you. Ken, Joshua, Jordan, and Gabriella. Gabriella, I love little Jimmy too. He's a connector, right? And he's a great guy. Ken, I want you to go back to something you said in your testimony that I don't know the rest of the city is paying attention to. And you talked about rejecting that notion that the hot neighborhoods and the hot areas were where we needed to go. And Jordan, you were just with me the other night, and I know when you hear Ken say that, you say, that's just what I heard the other night, in that community. I mean, we've been trying to, with, loving all of Philadelphia, but we've been trying to convince people, Ken, that a lot of the new construction that we think is modern and it is beautiful, but, we may not want to have a barbecue on the roof. Right, we may still want a yard, right, a backyard or a front yard, and we may not always have to demolish a beautiful existing structure that just needs a modern kitchen and a modern bathroom. But you made it make economic sense for the developer. Tell us how you did it and why.
So, taking you back 29 years when I got into real estate development, I was living in Fishtown at this time, and looked around the city and said, where do I want to develop? And one of the neighborhoods I could have gotten into and I would have made a fortune is Grad Hospital area.
Great.
But what happened was, in the mid-late 80s, I saw a lot of real estate developers going under. They had assumed that appreciation would go on forever.
Okay.
And all of a sudden, when that recession hit and property values dropped 30-40%, they were out of work, they were out of business. And that happened just before I got into real estate, so I learned that lesson very quickly. And people have very short memories, and they think it's going to go on. The gravy train's going to go on forever. So this is what I'm teaching in JumpStart, and not everyone's going to follow my model or my thinking, and that's fine. People need to think for themselves. But that's really the economics behind it. It's this whole turtle and the hare story, right? Where slow and steady, if you want to be in it for years. If you want a quick hit and you're going to be in real estate for 2 years, yeah, maybe you want to go into one of the hot neighborhoods. But if you want to make this a lifelong dream and career and nest egg for you and your family, I suggest slow and steady is the way to go.
Let me also say that I do have a problem with this being called JumpStart Germantown. Like, we've got to work on that. Councilman Green, sponsor. I know you work in this area and you love this area, and I love this area too. But I was going through some notes, and 7203 Summers, 7002 Far, 1720 67th Avenue, 7226 Rugby, 6600 Uber Street, 1948 Ashley. Ken, they're great, but they're not in Germantown. They're in the 9th Councilmatic District, and it's called Mount Airy, and it's called West Oak Lane, and we want to participate and benefit too. So are you saying that in response to Councilman Green's question when he asked, what could the city do to partner with you? And I'm always looking for the rubric, like the instructions. I'm a district council person, and I want JumpStart Lawncrest. I want JumpStart Lawndale in the 9th Councilmatic District. Your instruction to me is, well, Cherelle Parker, you need to find a way to utilize the land bank and accessing vacant properties in your district and find a way to connect that with the JumpStart program, and that is how we can sort of begin to create a relationship. Is that what you're saying?
That's correct, and I'm glad you brought this up, because one of the other things about the loan program is we don't just loan money for Germantown, we loan money for every neighborhood adjacent to Germantown, and hence why we are heavily involved in Councilwoman Parker's district. So I would say to you, anything not included in that area, which by the way includes Mount Airy, Oak Lane, Logan, Nicetown, Tioga, and East Falls, is already covered. We're taking in people into the training program and we're loaning them money. Now, neighborhoods in your district like Lawncrest, I would love to see a JumpStart Lawncrest. Let's do it.
Okay, listen, I'm sorry, Councilman.
Well, just a real quick point, because you know what neighborhood I come from.
Sure.
And it's just north of Lawndale called Burholme. I'd love to see JumpStart Burholme as well. In fact, even Northeast Philadelphia needs a JumpStart from time to time. I think we're on to something, and talking to the man that developed it here. And
it's all doable.
Thank you for bringing those questions up. They're great. That's all. Thank you.
In addition to that, I wanted to, and I think this is important to get, on the record, and I want to make sure we note it, because I said, wow, he wasn't afraid to say this out loud. Joshua, in your testimony, you say, this is the power of JumpStart Germantown. It gives everyday people who may not have the money, and this is what you say that we don't talk about, social capital, an opportunity to compete in business. Sometimes there are some folks who would say that there was something that you didn't do right in order to get access. And I'm listening to you, and you're bright. You have the ability to do the work. But no matter how much smarts and skills and intellectual property that you have invested in the process, there is something very powerful and beneficial by being connected to a Ken Weinstein network, especially if you are not naturally born into the Ken Weinstein network. And so I think, Ken, you may not even like to say it out loud, but by welcoming this group of graduates into that social environment and or circle, particularly if they're not born of it, that is pretty revolutionary for us. And I'm not sure if you were the one, Joshua, but the Philadelphia Tribune featured a story about two gentlemen. They have a picture of them. I'm not sure if the block was Rittenhouse Street, but they talked about their first properties, working with JumpStart Germantown, and how they had tried to do some of the actual work themselves, right? But you connected them to contractors that they could actually afford to get the work done through. So Councilman Green, I want you to know, Joshua, I appreciate you putting that on the record, and because elected officials can say it all the time, but you told the truth, and he's actually done it. Yes. So I appreciate that. I also want to note for the record that we've talked about diversity and inclusion in the trades. And we've talked about sort of debundling large contracts so that small guys get access to the opportunity. If we do this right, the network of contractors doing business on JumpStart projects across the city that are already small, because you've said middle neighborhoods are good enough for you, right? And that's Sawtooth, right? It's not a whole block. Could be 2 properties on the block. We will create it and have carved a niche for a group of contractors that need some estrogen, Gabriella, to sort of grow as we move forward. And so I want you to know that is not lost on me. We're going to sort of talk with the folks in the city RDA to find out what do we do to get some Councilman Taubenberger, Longcrest, Lawndale, Burholm, Oxford Circle projects sort of on your radar and into the system, and in hopes that we can use this, because the city can't do it all, that we can use this as a vehicle to move forward. And you had Jordan, I don't mean to embarrass you, but I do. Jordan was at a community meeting earlier this week that we had at Oxford Presbyterian Church. And I don't know if you know it or not, Jordan, but developers don't usually come to community meetings in advance of a project to listen to what the community is interested in seeing in their neighborhoods. And Yvonne Boy here from the Commerce Department was there. But I want you to know that your folks sat through that meeting, which was very well attended, and they didn't speak once. All they did was listen, to take inventory of the vacant properties that were discussed in the area and the desires of the people who live there and who are vested. And that matters a great deal. Joshua, I do want you to comment on that whole, the social capital piece that JumpStart has connected you to. I want you to say something on the record about that.
Absolutely. So prior to joining JumpStart Germantown, I had submitted loan applications. This is going to be a little bit about my background. So I, grew up in Philadelphia, went to the High School for Creative and Performing Arts, went to college at Millersville, graduated, got a job working in corporate America, was a little bit unfulfilled. So I knew entrepreneurship was something that I wanted to pursue. I came from a family that had a real estate background. But what happened was that when I got into entrepreneurship and I needed to get capital, again, I would go to all the banks with my credit score, with my business plan, with my resume. You know, everything was perfect. All T's were crossed, all I's were dotted. But for whatever reason, there was always this eloquent rejection of why my projects couldn't get done. And, you know, I never wanted to interject race into the situation. I always tried to stay away from that. But it's like, why can't I get my projects started? Not even to refinance out of. And I know that now when I submit a loan application to refinance out of a construction loan, and they see JumpStart Germantown, they're like, oh, that's Ken Weinstein's program, or, you know, Philly Office Retail. So it gives you some social clout. Now all of a sudden, I'm the same guy with the same credit score and the same credentials, but because I'm connected to Ken, I'm somehow, he's good now. You know, he's on the approved list, so those loans come out. So it is very important that, you know, and I try to get out here and network as best as I can, but again, just coming back to what I said, who's willing to part with their precious resources? Who's willing to part with their dollars to say that they actually believe in you? And that's what Ken did. And then, you know, that's the social capital piece. And again, you, like Justin said, you can email him at any time. He'll email you back. You can message him on Facebook. Everyone else, and I'd be remiss if I didn't acknowledge the people in the background. I just want to say thank you to Angie Williamson, Kate Schoner, Kyle Miser, and Kevin Matheson. These are the backbone of JumpStart Germantown, and they answer all my stupid questions, so I just wanted to acknowledge them. But Ken has been a quintessential piece, just socially, being able to name drop to get me to another level.
Joshua, thank you for that. I will leave this as my final comment. You know, I appreciate you, Ken, for not leaving middle neighborhoods behind. I mean, some of us have been howling in the wind for a very long time about the people who live in these communities who are not living in deep poverty, but sort of make a nickel over what the income eligibility guidelines are to be eligible to access to any home improvement opportunities that are available. It is my hope, Ken, that JumpStart will find a way to utilize a program that we are now working on in the city of Philadelphia. I just introduced the legislation last week on behalf of Council President Clark. You know, there was a very small increase in the realty transfer tax, and from it, we were able to support, you know, doing away with the entire backlog for the Basic Systems Home Repair Program at $60 million dedicated to that, but $40 million for the first time will be dedicated to a loan loss reserve for financial institutions similar to those, Councilman, who you mentioned in the Capital Consortium, that will lend. Right now, the number we're hearing and thinking about is to up to $25,000 that residents in these communities can get access to a loan, low interest loan, even if their income is slightly above what the normal low income guidelines are, to modernize their kitchens, their bathroom, the driveway, point the brick, do the steps. And I want to know, is that something that, if you're rehabbing a property, does that even help you in your process?
Oh, totally. And I thank you. I did read the summary that you had introduced that, and obviously I'm the chair of the PHDC, and I'm well aware of reducing and eliminating the backlog that City Council so generously supported. Totally. What you're talking about, both of these efforts, both the Basic Systems Home Repair and this new legislation you've introduced, go hand in hand with what JumpStart is doing. So yes, we are encouraging real estate developers take blighted properties, rehab them, but my hope is we never get to that far. You know, I want to keep low, moderate income people in their homes so they never get blighted to start with. But now that we have blighted properties, we need dedicated people like the three people sitting here to make a difference. But yeah, if we can get on top of the program and keep people in their homes, that's better.
Thank you, Councilman Parker, and also Councilman Tonberger, for talking about the need for JumpStart to be in more than just Germantown. That's why specifically we titled the resolution JumpStart Initiatives, and not just JumpStart Germantown. I think the next panel will also talk about how we can broaden this to other neighborhoods. And I think the work, Councilman Parker, that you're doing regarding the BSRP program is the perfect complement as Ken said, to keep people in their homes so they don't become blighted, but then the property that's next door to that person, if it is blighted, it gets renovated for workforce housing. So now that way you have a senior or a seasoned citizen who now through this new initiative can maintain their home and maintain at a certain level, but also now live next door to someone who's moving into the community or someone from the community who just bought a workforce house that's been developed through some of the JumpStart initiatives. So I think these things go hand in hand. So thank you. Can the clerk read the next panel?
Casey O'Donnell and Dana Hanchin.
Very good voice. It's my card, it's my cell number.
Okay.
Ken?
Ken.
How you doing?
Casey O'Donnell.
Hi, Casey. I'll tell him.
All righty, and I know this has been a long day, but we want to talk about the next phase of JumpStart, so we can start with Dana, if you'd like to begin your testimony.
Great. Thank you, Councilman Green and committee members for the opportunity to testify. I'm Dana Hanchin, Deputy Director of the Philadelphia Local Initiative Support Corporation. LISC is a national nonprofit community development intermediary. We work closely with community partners on the ground to revitalize Philadelphia's neighborhoods and improve quality of life for residents. I'm pleased to be here today with two of those partners, Ken and Casey O'Donnell. Through the generous support of the Barra Foundation, LISC and Philly Office Retail have been working together to document and share the success of JumpStart Germantown so other neighborhoods in the city can benefit as well. To this end, we have produced a JumpStart training workbook, which helps develop skills, build knowledge, and offer tools for aspiring developers. This workbook accompanies the Train the Trainer slide deck, so anyone can deliver information and knowledge on the principles of JumpStart and the 7 jump steps of the real estate development process. In addition, we've also produced a JumpStart how-to guide to help organizations interested in launching a JumpStart program in their neighborhood. This ranges from going step by step to creating the training program, the mentoring program, the developers network, and the loan program. And soon, all this can be found on gojumpstart.org, which will make all the training materials available to the public at no cost and provide a platform for developers and neighborhood programs to network. You do have one packet available. I submitted it as part of the testimony, so that is there. A lot of this is still at the printer, so we don't have it in mass. I would like to focus my comments on 2 areas. That's related to neighborhood organizational capacity and access to capital for aspiring developers. As Ken will share, launching a JumpStart program isn't rocket science and it's not expensive to implement, but it takes an investment of time and a network of partners and experts. Organizations will have to be organized, persistent, and attend to the details, the same qualities that we expect of aspiring local developers. Organizations should evaluate whether they have the staff and volunteer time with the core competencies to implement a successful program. For example, strong knowledge of their neighborhood real estate market, along with project management skills, meeting facilitation skills, relationship building, and networking skills. Also essential to the success of JumpStart, which we heard today, is the access to low-cost capital for acquisition and construction financing. Most developers who graduate from a JumpStart program will not typically be eligible for traditional lines of financing. And it may not be realistic to think a JumpStart program in a neighborhood would offer their own loan program like Germantown. That's why LISC has been meeting with community-minded, mission-based lenders that are committed to working with local entrepreneurs. We started conversations with a number of these, such as the Reinvestment Fund, Finanta, and the West Philadelphia Financial Services Center. And earlier this morning, we presented to the Capital Consortium to find out their interest, to find out what it would take for them to be part of this program, and if there are ways that we can build in credit enhancements to incentivize their participation. In closing, I would like to invite committee members and others to attend our JumpStart launch on November 13th at the Philadelphia Chamber of Commerce. We will be releasing these materials and provide an information session for neighborhoods or organizations or individuals who are interested in launching a JumpStart program. LISC is also excited to announce a small grant competition to help with early startup costs to 3 JumpStart programs in Philadelphia. We're looking at $5,000 seed grants to 3 neighborhoods in the city. Thank you for the opportunity to testify.
Thank you, Ms. Manchin, and we'll go to Mr. O'Donnell, and then we'll take some questions.
Good afternoon, council members and fellow Philadelphians. My name is Casey O'Donnell. I'm the CEO of Impact Services Corporation in Kensington. Thank you to Councilman Green and the committee for the opportunity to provide testimony related to JumpStart Germantown and its potential for implementation in other Philadelphia neighborhoods. Implicit in this subject and testimony is also a theme of equitable development, economic prosperity, and being lucky. I was born and raised in Germantown, first Baton Street, and then Woodlawn, then Shelton Avenue. I had a very brief stint in Chestnut Hill, and then about 20 years ago, I returned to 19144. I live there with my wife and 11-year-old son, so I feel pretty lucky. You're probably aware that most of Germantown was subject to redlining practices, and for a neighborhood that was economically stable and racially integrated since before the Civil War, somehow banks and the federal government didn't think that hardworking families with dependable income deserved mortgages. Further up Germantown Avenue, federally backed bank funds were abundant to prospective borrowers. Socioeconomic disparity continued to grow between different zip codes and between different racial groups. I obviously don't need to tell all of you about how race became a factor and who would have the opportunity to begin to amass intergenerational wealth. So fast forward to the recent renaissance in Germantown led by Ken Weinstein and his ever-growing band of developers. According to Facebook, JumpStart Germantown had 1,094 members as of last week. Let's make no mistake, JumpStart Germantown is a movement of equitable community development. Instead of experienced, wealthy developers buying up all available property in a neighborhood in transition, JumpStart participants who start with limited or no experience take a property in need of renovation, they get personally invested in a process, a property, and a neighborhood. JumpStart's not without risk, but it's an opportunity for people of all backgrounds, colors, and religions to build wealth that they can hand down to their children. Some people say that if you're rich, you're lucky to have been born into it. In many cases, that's true, but the definition that I ascribe to is that luck is the intersection of preparation and opportunity. So if you can get connected to JumpStart and Ken, you too can consider yourself pretty lucky. Because Ken is offering both preparation and opportunity. He has put both his own financial and social capital on the line, and now we have the opportunity to carry this forward. About a year ago, actually a year and a half ago, Ken double booked a meeting with a few people, including myself. We made it one large meeting because we were all there for the same reason, to see what we could learn about JumpStart. He then invited us to participate in his next developers cohort to see how we might be able to extend JumpStart into Kensington. We brought 9 people, including some residents of the neighborhood, to participate. As soon as the sessions were completed, one of the Kensington team couldn't wait for us, so he dredged up enough capital to buy a property, renovated it, rented it, and now he's on to his next house. Another participant on the verge of beginning his first project. We don't have all the pieces in place, but things are in motion in Kensington. Barra, LISC, and Philly Office Retail have now formalized the curriculum. There's no shortage of interest from participants who would like to secure their retirement with rental income from a portfolio of residential investments. As previously noted, there's both hard work and risk in this kind of investment. Relationships built into the program help mitigate that risk. It's not unlike CDFI lending. Relationships are essential to success. If these developers were more traditionally bankable and could secure a several $100,000 line of credit, they would. Instead, participants commit to showing up, participating, and putting some skin in the game. For this, they get an education, a support system, and a method of building income and long-term wealth. Thank you again for the opportunity to speak with you today, and thanks to Ken for giving people an inroad to prosperity.
Thank you both for your testimony. Ms. Hanchin, if you can kind of give me a little perspective on the announcement on November 13th, I believe, and that's going to be with the Chamber of Commerce, and what time will that be?
It is at 9 o'clock.
9 o'clock.
The invitation will go out tomorrow morning. And it is an information session as well as an announcement of our seed capital small grant competition for organizations who are looking to start up jump starts in their neighborhood.
And how much is that seed capital?
$5,000 each. We have about $15,000 we carved out of the grant we received from the Barra Foundation to help support jump starts in other neighborhoods.
Okay. And if you could provide information to the chair so we can get it out to the committee members, as well as the information on the how-to guide. I know it's being printed as we speak, but if you could provide that information to the chair as well, so that way they can get that information out to other organizations in their networks, because clearly that has been one of the consistent themes that various council members were interested in how they could have a JumpStart initiative in their communities. Last week I had a chance to tour Shift Capital, so I know some of the great work they're doing in the Kensington community. I know there have been some conversation with Shift about possibly being involved in this initiative from a JumpStart Kensington perspective. But I guess the challenge that I see in order to scale this across the city, not only making sure you have organizations that are committed and have the ability to pull together a JumpStart initiative. That's why I think the money from Bar and LISC is so helpful. But how do you provide the financing? Because I think that's really where the rubber meets the road. So I'm curious in reference to your conversation, in reference to Shift, and are there other entities that can provide that type of financing? I'm also glad you had an opportunity to present to the Capital Consortium this morning to continue that conversation.
Sure. So Shift was actually part of the other group that was double booked when we first went to Ken's. I showed up in Bryan, and some of his partners were there, and it turned out to be a great meeting. So the reason I thought we could pull this off in Kensington is, one, that Impact has a CDFI, and we're part of the consortium. So we asked from Treasury, I think we asked for like $500,000, and we ended up getting $150,000 to dedicate towards real estate development. So we had a little bit of seed capital, and the other idea would be that we would bring other finances into that pool through Impact Loan Fund, which is the CDFI, right? And also, do you know the CUSP program through Wells Fargo? It's like Community Urban Stabilization. Basically, all the houses they don't even want to send somebody to because the neighborhood's so tough, they try to give away. So I found out about it. I went and signed up, managed to get a house on the 2900 block of Rohrer Street. And this relates to financing, I promise. So the first time I went there was a group of people down in the corner, and I thought, well, what are they doing there? It turns out they were getting free heroin. It was sample day. And I thought, whoa, man, I've made a tremendous mistake taking on this house. But we also got a concession of $20,000 from Wells Fargo to essentially just take the property. And then we started banging on doors in the neighborhood, and it's mostly families. And the guy next door who was there with a whole bunch of people said, hey, could we even do a rent to own? And I said, I don't think that went well last time. You know, if you're interested in this process, let's stay in touch. Somebody else offered us $20,000 cash for the house that lived on the block. So I'm thinking, all right, something's happening here. We can make this work, right? So, and I think I mentioned we went through the JumpStart process with a bunch of people, including a couple people from the neighborhood. One young guy wanted to be here that is now going to be the owner of the Rohrer Street property. I don't know how Wells turned it over to us with the tangled title, but it took like 8 months to satisfy or get satisfaction letters for old mortgages. So we finally got a clear title. And with the concession money, we're turning the property over to John, covering the transfer tax, and we're going to put a roof on it. Reinvestment Fund wants to sink their teeth into something like this. So do you know Andy Rockland? So Andy and Elizabeth Franz have been the contact, and they've committed to following Ken's structure for financing. So I think it's 6% and a point or a point and a half for the closing.
I never heard the term.
Yeah, so obviously it costs them more to do that closing, and they're actually asking Impact to sign off on some of the properties. So we're going to keep the 150 as a pool to guarantee the initial loans. And we're looking for ways to source houses. So CUSP program's one. We're working with Councilwoman Quinona Sanchez to see if we can find other properties. Because that neighborhood, as you know, like let's say you're $75,000 into a property, when all's said and done, it's really hard to sell a property for that. So as Ken said, they've got to be rentals. Rental market up there will support that level of investment. So we've kind of cobbled it together. The other guy that went through the program just went and
hustled and he's off on his own and frankly doesn't need the support. I think the JumpStart program just showed him there was no magic to it. He was scared, and he went out and he's doing it on his own. So we've pieced together funding. I think it's going to fly. Shift Capital has been busy with their own stuff. I think at this point they're going to play more of the mentoring role and filling in the pieces. And there are some local developers that are going to be mentors. Right now, I'm personally working with Jonathan to make sure his process gets done. Setting up LLCs is a gap we have, so some of the accounting and legal, but we're on our way.
Okay.
If I could just add, particularly on the funding, maybe I'm too much of an optimist, but I believe where there's a will, there's a way. I've gotten calls from other developers who are interested, and I think if there's viable programs out there, they would throw in a line of credit or cash into this. I know that TRF, LISC, the Redevelopment Authority, PIDC have all voiced, we haven't gotten into details, but have all voiced an interest in possibly doing that. The other particularly good funding source that would have fewer little strings attached is foundations. I know that there's several in the Philadelphia area that are looking for creative ways of taking some of their investment dollars and putting that into low-interest loans. So we're going to start having those discussions shortly. But what it takes first is a viable JumpStart organization elsewhere, and then I believe the funds would follow.
Okay. Councilman Thomberger.
Mr. Chairman, thank you very much. And going right to Mr. Weinstein, so your definition of a viable program, which you said, and that was actually my original question, is a program much like yours, is that correct? I mean, it doesn't have to be yours, but one that is...
Yes. It's got to have structure and organization and a knowledge of the neighborhood.
How many programs do you think that are out there today are viable in the city?
Well, the only other JumpStart program right now is JumpStart Kensington.
Okay, but it's also part of, you're helping them, or you're doing this on your own?
No, so
Mr. O'Donnell.
we went to Ken initially just to learn, hoping
Okay,
that he'd share
okay.
his experience, and it turns out it's open source, right? So we're replicating the model as best we can, but there isn't a Ken that's willing to sign off on the loans, so the financing piece we had to put together creatively. I do think, without making it too cumbersome, that if there is a CDFI and funds could flow through that, the CDFI could underwrite the loans, because most CDFIs are getting support from Treasury for technical assistance or financial assistance. So even if we lose on the underwriting process, because a $70,000 loan just doesn't make you any money, that if other funds flow through, and the risk is shared by a pool. But we're still in touch. I think ultimately it's going to become a sort of large network, even if it's, each JumpStart neighborhood does it a little differently. I mean, one of the things we know about innovation is that it has to be adaptable. So I think if all the pieces are in place, it works.
Just hearing this, I mean, I feel that this could be a great tool to fight urban blight.
Yep.
And to fight situations, fight for a neighborhood when it's still something to be fought for. I mean, not to say that all neighborhoods are worth something, that's no question about it, but sometimes you can turn something a lot earlier before the whole place goes to hell. I mean, that's my viewpoint coming from this particular councilman. Yes, please.
So if you can envision Kensington Avenue,
Yes.
everything east of Kensington Avenue in 5 years is probably going to be worth significantly more than it is today.
Correct.
Much of what is west of Kensington Avenue, let's say all the way to Broad Street, is still going to be in deep poverty, and there's some significant challenges.
Gotcha.
We have some other strategies, but having a demarcation line like that is troubling. So what
Yes,
we're trying to
it is
do
troubling.
is only have participants in JumpStart Kensington who either live in the neighborhood or they're invested in some other way, they have a business there, to keep it that local, keep the money there, and the high tide lifting all boats. If we can get people just in that neighborhood to invest instead of letting outside developers, even
Right.
if they're bootstrapping it, let's keep it in that neighborhood.
Sure.
So if we can change that trajectory.
It makes a lot of sense. And Mr. O'Donnell, a couple things. 100 years ago, under John McDonald, I actually served on the board of Impact Services.
Come on back up.
Now I have a problem with time, but I certainly want to chat with you and maybe take a tour. But you raised something else that was very interesting to me in listening here. You really have to know your neighborhood well, because I think something you said earlier, correct me if I'm wrong, if I'm getting this wrong, just correct me, was that you have to know what the market will bear, so to speak. You had said earlier there was a particular neighborhood where you could do a rental property, but selling the house or the property wouldn't make sense, but renting it would make perfect sense. Is that correct?
Yeah, and it depends on the block.
Yeah,
So
I mean, you have
yeah.
to know, you intimately have to know your neighborhood,
Yep.
like what will work there or not.
You have to either have let's call Ken an anchor institution, or Philly Office Retail is the kind of anchor institution for JumpStart Germantown. I believe Impact and a partnership with Shift and NKCDC and LISC will be the anchor institution or the anchor collaborative. You gotta have that to make it work. And it doesn't have to be, it doesn't have to be a nonprofit, right? It can be a for-profit entity. Somebody's gotta take responsibility for the program.
And someone also has to have the knowledge of the
Yeah.
neighborhood. That'll work, or it's just not going to work, and it has to go this way in a rental property, or in a particular case, not this particular case, a sale might not be, it may never sell then. But knowing the neighborhood well is very, very important to the success of this program.
Yep.
So if I can just counter that a little bit, we are writing the how-to guide that'll be available next month as if it's going to be implemented, a new JumpStart program from someone who doesn't know that community.
Gotcha.
And instructs them how to talk to local realtors, how to talk to local developers, ask some of the questions, you're asking good questions.
Thank you.
That need to be asked. But in the end of the day, it could be someone who's just really organized, who then trains local developers who then do know the community and know whether a property should be a for sale or a rental and that sort of thing.
It's interesting. You just raised a very good point. Training the trainers is sort of a very interesting point, which is exactly what happened. I said earlier I was the historian. I'll give you real quick. That's what General von Steuben did when Washington was here. He trained the trainers. He trained sergeants and officers of the Continental Army for the success. He couldn't do it all himself, but that, what you just said, is near genius. And Washington saw that in him. And when it was all said and done, when Steuben retired, Washington said that von Steuben was indispensable to the victory for the United States, for it to take form. And for a victory over urban blight, Mr. Weinstein, I think you're onto something very good. And maybe we'll call you General von Steuben when it's all over. Thank you very much.
I appreciate the comparison.
You're welcome.
Any additional questions? Yeah, I want to thank the panel for your time today and providing great information. I think we're really on to something in reference to trying to replicate the work that Ken has done. I think we put together today's hearings, both in the Capital Consortium and also JumpStart, because there's some synergy between the two initiatives, and what we're trying to do is trying to address poverty here in the city of Philadelphia and create more entrepreneurs, both through JumpStart and also providing lending opportunities through Capital Consortium. So thank you for the work that you do in your communities, and thank you for being here. This hearing under resolution, I'll give both resolution numbers, 160957 and resolution number 161118 will be recessed to the call of the chair. Thank you.